Hey everyone, welcome to another edition of Trading Bitcoin with your host, Tone Vase. I wasn't sure if I was going to do an episode today. I actually spent my entire morning editing the next crypto scam episode on Ethereum. And like one of the reasons why crypto scam went away is because it was taking up way too much of my time. And I was having a problem finding guests, but I was able to find a guest for another Ethereum episode. I spent a bunch of time working on it now. I decided to go live because my video was processing. So I'm like, hey, you know what? I got an hour to kill. I have to wait for this video to process anyway. Texted Tyler. Tyler was available. So go ahead and say hi, Tyler.
Hey, everybody. Good seeing you all again. I love doing these shows with Tone. We usually talk about things that most other people don't talk about. I've got my hat on. I hope everybody cannot read it because this is the best beach in the world. I spent many years looking for the perfect beach, and this is one of them. It's actually, I'll tell you what it is. Just please don't go there when I'm there. It's called Shoal Bay. It's on the island of Anguilla or Anguilla, if you don't speak French very well. Anguilla means eel because the island is shaped like an eel. It's just north of St. Martin. In fact, you have to fly into St. Martin and take a ferry over to it. Spectacular island, but this particular beach, Shoal Bay, there's a place there called Elodia's, and Elodia makes great cheeseburgers, but it's great snorkeling, the most beautiful sand and water I've ever seen. And there's almost never anyone there.
Oh, that's great. I got to check that out. I got my own favorite beach in the world that I refuse to publicly name. That's where Van Zen and I were streaming from that time in Thailand.
Oh, yeah.
And we have we're planning another, getaway out there, maybe with a few more people. We'll see. Same place, going to rent a bigger house. It's still not going to tell anybody where the hell we are. So good luck figuring it out from the pictures, but the pictures are pretty unique. All right, I'm going to jump right into screen share. Actually here, like this is the processing of the video. Johnny Dilly was my guest for the Ethereum episode, and I'm processing that video now, about 40% done. It's going to take like another hour. They get to watch the football game. Wow. I don't know if I want to spoil it for people, but two crazy games. Really, really good.
Yeah, right. Incredible.
Yeah. The goals in that second game were both unbelievable. Okay. So my website, one seat left in Atlanta, having a bit of a rough time getting a venue in Atlanta. Seems not have a problem getting seats filled, but hopefully I'll have a venue all squared up the first half of next week, and you guys will know where it is because ran into a little bit of trouble. Okay. Other than that, the educational section, please learn trading. I need to update this the moment I find a free day. I already talked about the workshops. If you are interested in simply using the indicator, please check out the indicator page. And of course, if you like my work and would like to support my work and you need or use any of these products, including you have a friend that wants to learn how to use Bitcoin as like a 101 introduction, Julia has a great service for that. I think that's it on my announcements. Okay, let's go to the charts. Let's talk about the charts first, and then I want to talk about just as a TLDR. Tyler, do you think it's maybe a little bit more of a coincidence that we had a $500 pop immediately after the futures expired? Or do you think that it had a huge influence on that?
I believe it had a big influence on it, but I can't say that for sure. That's just the probabilities of when it occurred. And if I was on the other side of a trade, if I had hedges on where I was long futures and short Bitcoin, And I was following open interest, as you talked about in your previous discussion. And I saw what the volume was like. That was a wonderful opportunity for someone that was getting out of June contracts anyway before buying another contract to reverse the positions on short Bitcoin if they were short and go long, and then hedge by shorting the further out future against it and locking.
That's exactly what I was thinking. That's exactly what I was going to say. It feels like someone was just waiting for the futures to expire because they wanted to purchase a bunch of Bitcoin. And they wanted to hedge that position in the futures market. But because these futures expire monthly, the person just waited, or the institution, they just waited. They probably wanted to buy Bitcoin for a week or 2 weeks, and they just said, you know what? Let's just wait. It's not going anywhere. It's stuck in the $6,000 zone. Maybe we'll get lucky and maybe it'll drop some more into the end of the month. And it did. It was literally at the lows of 5,800.
Yep.
And it just has this feel that because Bitcoin is so illiquid, some large investor, whether it's a hedge fund, whether it's a money manager, whatever, although a money manager would have a problem buying the actual Bitcoin, but some big player just said, you know what? It's time. I'm going to buy a bunch of Bitcoin and I'll hedge some of it with futures. And I think there's a high probability that that person overestimated the kind of influence he can have with, like, I don't know, $10 million.
Yep.
Now, that's one way to look at it. Now, here's another way I wanted to look at it from a live perspective. I don't think this has happened before. I'm actually going to go back. I'm going to look at the month-end days and see if they were as interesting as yesterday. Also, it's you also realize that, like, had this been a drop of 500, which it could have totally been, right? It's just a little harder to short Bitcoin on the unregulated exchanges. Yeah. But it's easy to buy Bitcoin on the unregulated exchanges and take possession of that Bitcoin, which is why the jump was to the upside. This jump could have easily been to the downside if the same player was willing to risk leaving his short position on Bitfinex and hedging that short position with a future out a month or 2 months.
Right.
It could have been the other way. Now, if it was the other way, everyone would have screamed manipulation to high heavens. So because it was to the upside, there's probably a lot less screaming of manipulation because it was to the upside. It's like gold is never, ever manipulated to the upside, but the moment it falls $10, it's manipulation.
Right.
We've heard this for 30 years, right?
Yeah, absolutely. Absolutely. And all the rumors about manipulation in the stock market based on big banks and central banks coordinating movement of prices during very difficult times is always to the upside. It's never to the downside. And that's why it's so dangerous to ever be short the stock market, particularly when things are going wrong. So that's important. This will be a great exercise, what you suggested, going back and looking. Now, what are the monthly settlements in Bitcoin?
Oh, it's every month.
It is every month because
every month, yeah.
Most futures are 3-month rolling. And so you get a March future, a June future, a September future, and either a November or another December, depending on what the future is. So I just haven't looked at the CMEs that closely in terms of if it's monthly or not.
Yeah, no, I'm pretty sure it's monthly. Yeah, July, August, September, and then December, right? So they're they're monthly. I mean, the regular futures are also monthly. It's just that the quarterlies and the yearlies are available way earlier in the calendar cycle.
Right.
So they become more liquid by default. Like even let's say on gold, like the quarterly futures, March and June are very important. And like July is pretty much almost useless because the July future doesn't show up until like June. And most people are already invested in 3 months out, and very few people go in for that 1 month hedge.
Right.
Or speculation. Like when I was a futures trader, it was very simple for me. I will trade whichever future has the highest open interest and the highest volume.
Yeah.
And there is maybe like 1 or 2 days where there is a mismatch between the open interest and volume, where let's say one contract has more open interest, but another contract has more volume. And those are usually periods of time when contracts get rolled. And those are also periods of time where my broker is not dumb enough to let me hold something that is rolling because they know I have no ability to deliver nor take possession.
Right. Right.
So I've always traded whatever is most liquid. That's why I don't remember which months are more liquid, but obviously the quarter and the year end are way more important. But like, for example, look, the December seems to be available, but it doesn't have any beta. So maybe it's not really available here in, well, we can go to prior settlements, right? So settlements, and I can look at any contract and I can see where it's settled. So these are daily settles. Damn. Can I look at, well, we know that it's the last Friday of the month, so we just have to figure out what the calendar looks like and just walk through it. But let's get back to the current picture of price. We are holding the 63.50 period. And I mean, nothing like I said in that video last night at 1 a.m, which was like very brief. I'm really curious tomorrow. I'm curious by how much the 30-week moving average is going to drop, because it's going to knock out the third highest close Bitcoin has ever had, and that gets removed tomorrow and tomorrow night, and then next Sunday night we're going to remove the highest Bitcoin close it ever had.
Right.
30-week moving average, and it's going to drop substantially for a 30-week moving average period.
Yeah, that's almost a $6,000 candle, and the one before it is a $3,500 candle. So that's $10,000 coming off the calculation.
Yeah, it's it'll be a lot. Yeah, it'll be a lot. So we'll keep an eye on that. Like I've been saying, we overshot the triangle from a very large point. So even though we were going down, it wasn't the best short trade because we overshot. Had the price of Bitcoin been able to hold $6,800 back in early June, back in the second week of June, had the price of Bitcoin been able to hold 6,800, bounce to the $7,500 area, and right now, or sometime in early to mid-July, was breaking 6,500 to the downside, this would have been the perfect short trade, because then I think we would have gone from 6,500 down to 5,000 almost immediately. Almost immediately. But right now, because we did drop out of the triangle, and because we are on a 7 of 9 weekly, until I'm proven wrong, 5,000 in the first half of July is still my target, the 45.75 area. And I actually already got a question. Someone asked me, what is my % chance that your 49.75 price target will hold and reverse the trend? Less than 50%. Not that far below 50%, but like, first of all, first we have to get to 49.75, right? So there's always a chance we're not going to make it to 49.75. There's always a chance that the bottom is in. I find that a chance of that to be only 10%, that the bottom is in. I'm giving it a 90% chance that we are going to get to 5,000, 49.75. I give it about a 90% chance. Now, again, 10% is still possible. But to me, there's a 90% chance we're going to go to 5%. Sorry, to 5,000. And yes, I do have a private bet with someone that it will by September 1st. Not a public bet, but a private one. And definitely not for $10,000 again. That was just stupid. It's for a significantly smaller consequence. So, okay. So what are my chances that we're going to bounce off of 5,000 if we get there and go to new all-time highs? Maybe 35%, maybe 33%, right? So I give it like 2/3 chance that 5,000 will only reverse the price temporarily. Assuming it reversed the price at all, like if enough people listen to me and if enough people think we're going to bounce over 5,000, I'm going to raise my chances that we're going to blow right through 5,000 and go to 4. You know what I mean, Tyler?
Yeah, absolutely. You don't want the consensus on your side on any trade. The consensus can build after the trade has taken place when it's obvious that that trade was correct, but you don't want that before the trade takes place. That minimizes your chances of being correct.
Right. And people really hate you and I for constantly suggesting the vicinity of 1,000 is the ultimate low. And I have this feeling that when the price is pushing 3,000 and everyone starts, believing in our $1,000 target, it significantly removes the probability of it being 1,000 and raises the probability that 3,000 will be the low.
Yeah, that's very true. Or the inverse of that, if everybody thinks that, no one thinks that 1,000, I mean, literally no one except for you and me and one or two others. But you're right. As you get closer, particularly as you take out things like the 6,000 area, which we did, once we hit the 5,000, I don't think we're just going to hit it. I think we're going to break well below it and then hopefully close weekly above it. But as each of those barriers falls, the number of people begin to switch. So if at some point, as we approach 3,000, everybody believes 1,000 is, or more people believe that 1,000 is a possibility, then one of two things is going to happen. We either won't make it down to 1,000 or we will blow through it and we will drop down to
correct
800, 700, or 500.
Correct. And people don't understand TA, don't want to learn TA, and just want to, troll on Twitter, making fun of people's bad predictions. They don't understand that the moment everyone believes me that we're going to 1,300, I will probably walk away from that target because I have to by default as a trader.
Yeah, that's exactly right. I love being in the minority as long as the evidence is on my side, either technically or fundamentally. It just means that I'm reading something differently than the majority is reading it. That doesn't make it right, but it increases the probability that there is another adage. I love adages, another adage on Wall Street, which basically says that the market will do whatever is necessary to punish the most people. And another way of looking at that is the number of people that believe something to be true are probably going to be wrong, which means taking an opposite point of view doesn't mean you're going to be right, but your probability of being right increases as more and more people run to one side of the ship as opposed to the other side of the ship. And it just happens over and over and over again. So that's why it's an adage, and anyone that's been around very long knows that it's true. So when you hear Tone make a comment about where the market's going when it's up at 12,000 or 10,000 and has a target down as low as 1,300, but definitely down below 5,000, but he's the only one saying it. And if 2 or 3 or 4 other people say the same thing, but no one else does, and everyone ridicules the call because it's so absurd in their minds all the way down, what begins happening is more and more of them begin to realize the possibility that it's true.
Right. And the most important thing in this, right? The call has to be within the macro trend. Like, don't tell me that these guys calling for $100,000 later this year are somehow in the minority and they're going to be right. No, that's just stupid. Like, the call has to be within the macro trend. It's the only way it makes sense. So sure, we can argue over what the bottom is, and we can argue over where it's going to bounce or how low it can go. But we cannot talk about how high it's going to go because we don't know where the bottom is. So anyone talking about new highs this year, I think is completely misguided because they're like, hey, it's like they're running before they've learned how to walk.
Yeah, that's another excellent point. It's very simple. If you've been doing this for a long time, the concept is simple. But for those that don't, the number of times you need to be right consecutively is very important in terms of trading and money management. That's why very few people short stocks, because you have to be correct on 2 things. One, you've got to be correct on that particular stock you're looking at. And what you've just done is you've entered a position that has infinite downside for you and limited upside. So by definition, when you short a stock, you start out way behind the 8 ball. Now, the second thing about shorting a stock is if the macro trend of stocks in general is up and you're trying to short a stock, you have got to be right twice. First of all, you've got to be right that this particular stock is going to run counter to the asset class. And you've got to be right that your analysis is correct on that particular stock. And here's the real trouble. Number 3, you have to know when to get out. So you've got to make 3 correct decisions, as opposed to if you buy a stock and you are an uptrend in stocks in general, you've got all that majority of buying power on your side. You're not fighting against it. You're not a salmon swimming upstream against the current. You're going with the current. So you can be wrong in your analysis and your stock is still carried up with all other stocks. So you don't have that problem. And your downside is 0. So if you buy a $10 stock and you buy 100 shares, the most you can lose is $1,000. If you short a $10 stock, you can lose $1 million. You can lose your house because it can keep going against you to the upside. It can go to 20, 50, 100, 100,000, split, go back to 1,000, split again.
And there's a high probability that company will get bought out, way higher than that company, let's say, kills a bunch of people and the stock goes to 0, right? Yeah. Or that company, there's a very low probability that the company you shorted is a fraud, unless you've done your due diligence, which the retail investor is incapable of doing. Like, it's not possible.
Right.
but the probability that your company is going to get bought by another company is significantly higher. And when you short a stock, you're taking a chance you're going to wake up in the morning and the stock has doubled in price, and that's it, and it's flat.
Yeah, that's another great point, because what people don't understand about being short something, and I'm not short Bitcoin. I'm out of Bitcoin in cash, waiting for an opportunity to buy. So if it goes up, I don't really care. I want it to go up. I think it's going up, simply not now. But it's a little bit different when you short a stock, or you short an index, or you buy a put against something. And the reason is just what Tone said. If the stock at the time you short it has a market cap of $1 billion and it drops in half, and now it's gone from $10 a share to $5 a share, a lot of other businesses are interested in the value of that company. And out of nowhere, you can get a buyout, and it doesn't have to be a friendly buyout. It can be somebody with a lot of money that simply buys a majority off the market and moves the market up tremendously. And you're standing there short because you've got a piece of paper that shows you did a little bit of work and you saw that something was wrong with the company. So that's another good point. But your point about the up and the down, the chart we're looking at now shows the bull market and the bear market of Bitcoin. And in that bull market, Tone had certain upside targets that were taken out, and then other upside targets, and they were taken out because those targets were fairly easy to see, to understand technically and fundamentally in a bull market. On the downside, if you are trying to say that in a bear market, you think by the end of this year, Bitcoin is going to be at 25,000 or 50,000 or 100,000, you now have to be right twice, just like the guy shorting a stock. You've got to make sure that this bear market comes to an end. And you've got to be right about that. Because if Tone's right, and if I'm right, we are not at the end of this, which means your call for 25,000 or 50,000 or 100,000 is silly until a bottom is put in. Once a bottom is put in, now you can make your predictions. But first, you've got to make sure you're not in a sideways market. Because after a bear market, you can go for months or years. Take a look at 2014 bear market in Bitcoin, where after you hit your lows, then you went for months and months and months and months without going into a bull market again.
9 months.
9 months. And therefore, if you're making calls about these big numbers in a bear market, by the end of this year, you've got 6 months to, first of all, be right about a bottom. Secondly, be right that money is going to come in such a way as to push it to new highs. And third, you've got to avoid a market that has been devastated and has lost 75% of its value, or 80 or 85 or 90. And 1,000 cryptos have already gone out of business, according to that article that Lee and I talked about this morning, have dropped to zero. And so the landscape right now, we don't have to wait a month or 2 months or for 5,000 to be hit. Right now, the landscape in Bitcoin is devastated. So you've got to be right 2 or 3 times in a bear market calling for new highs, where we only have to be right once. And that's where our targets are.
I just want to comment on one thing you said, and that leads into our last question that I'm going to take on before we talk about the price. And then I already see a couple of other questions. So when you said, so whenever there is a big coordinated short, or let's say, like you said, when a company loses 50% of its market cap, and you are in that short position because everyone else is in that short position, and you guys are loving it, you're rolling in the dough, we're going to take this company to zero. What you underestimate is the moment you double down again, another company could just take over that company, and the value of that stock that fell from $10 to $5, or let's go from $100 to 50, and you started shorting at 75, you may realize someone just bought this thing out for 80.
Yeah, exactly. Overnight, literally
Right.
overnight. And you can't make your trade as fast as that buyout can take place.
And this brings us into the next question, which is a really good question. Oh man, that I just lost. I'm such an idiot because I clicked on it. Give me 1 second. Here we go. Davi says, we are seeing a lot of bullish people in Bitcoin expecting $100,000 long term, and everybody thinks Bitcoin will eventually go up. Isn't that a bad thing? Any thoughts on the long-term Bitcoin euphoria? And here's how I'm going to answer that question. The majority of the people that are expecting $100,000 long-term are clearly expecting it a lot sooner than later. And if you ask some of the people back in early 2014, they were expecting $100,000 Bitcoin as well. And a lot of them got so frustrated at the end of the bear market. Not only did they not just hold on to their Bitcoin in cold storage, some of them rage quit or went to altcoins, right? So just because the majority of the people are still expecting $100,000 long term, let's see what they say when this thing plays out, right? So that's one thing. You'll probably hear a lot less people talking about this because when their friends and family are becoming very irate that they got them into this thing somewhere near the highs, these people are going to be a lot less, I mean, again, they have to be real people, right? It can't be like anonymous Twitter profiles that have $100,000 in their Twitter handles, right? These have to be real people. And, like the Tim Drapers and the other top VCs that have bought 100,000 Bitcoin for their private funds. These guys have been going on TV talking about how Bitcoin is going up to $100,000. If Bitcoin does fall from 20,000 down to $1,000, if these guys go back on television, they're going to get crucified basically for their prior screams of 100,000 when it was 20,000, right? This is where you have to be real careful. In addition, some of those investors of theirs might actually, or some of the board members, they might actually pull their money out of their fund if these funds got over leveraged Bitcoin and now they're sitting on monster losses. They're going to have to explain to the non-crypto people that this is still a good investment, even though their portfolio is down 40, 50%. So I am actually waiting for a lot of these, big VC guys that have been talking Bitcoin up for the last 3 years to actually step away from the space, leaving room for Bitcoin to go up because nobody believes in it. Does that make sense to you, Tyler? Oh, I lost your audio. Yep, you're back. Nope, I lost you again. No, you're back. You're good.
Okay, good. No, that makes a lot of sense. And here's another adage in terms of Wall Street, but also commodity investing, particularly hedge fund investing. When you hear somebody making a public statement, if they are a very sophisticated investor, first of all, it's very unusual because very sophisticated investors don't want to telegraph what they are doing. If you hear someone doing that, there is only one reason for it. They are attempting to persuade you to get them out of trouble. And that is very important to understand. That's very different than trolls or someone that's a hodler that doesn't like someone calling a bear market. That's a different thing. That's a personal thing. They're taking it personally, but they don't really have any motive. They try to impute a motive that if Tone is saying it's going down, that's what's causing it to go down. If Lucid Investments is making calls to go down, it's because we're short and we're trying to take advantage of it. And all of that is nonsense. But listen to who it is saying. There are a half a dozen very sophisticated investors who have done very well over the years, and they have been coming out making outrageous statements for how high Bitcoin is going to go. As soon as I hear that, say these guys are in trouble and they're trying to get the unsophisticated money to bail them out. And guess what's going to happen? If you jump on that bandwagon, their bandwagon, as your money comes in, theirs is going to be leaving. That's called being a bag holder. You will be left holding the bag from the smart money, and they will have talked you into it so they can get out of it. Read up on Joe Granville, and he is the one that made that comment famous, holding the bag, when talking about how institutions, hedge funds, large banks attempt to get people to bail them out of difficult situations by talking up a particular position. Don't believe what you hear, which makes it very difficult to do what Tone just described, which is where is the consensus? How do you measure it? How do you know? Do you just count the 25 comments on YouTube or the 25 comments on Twitter? There are ways to do that in the futures market, having to do with open positions compared to volume, and in the options market, there are ways to measure where the sentiment really is. And I'm not just talking about volatility indexes. I'm talking about who really owns what at a particular point in time. There's a way of measuring how many people are short, how much stock in certain companies. So there are ways of doing that, but there are no ways of doing that in the Bitcoin world because it's too young, it's too volatile, and it is too illiquid. And therefore, anything you hear somebody else say, please take worth a grain of salt.
Yeah. Hey, Tyler, like as much as I want to go on and talk about the charts, like I am getting some amazing questions.
Great.
That's going to hold off the charts for the time being. Well, one question is very, very simple. Someone asked any correlation between the BitConnect scam and the rise fall of Bitcoin price. My answer is, well, yeah, well, not really, but here's, look, scams get exposed in bear markets. When everyone is happy because they're getting rich on the side, scams don't, like Bernie Madoff could have, if the market did not crash in 2008, Bernie Madoff could still be running his Ponzi scheme. The reason why Bernie Madoff got exposed is because when the crash happened, enough rich people lost a bunch of money in their other investments. So they pulled their money from Bernie Madoff's funds to maintain their lavish lifestyle, to then realize the money isn't there. So a lot of these Ponzi schemes, they fail in bear markets after bull markets because that's when people start demanding their money because they need it. So there's no direct, so I guess it's a direct correlation that the fall of Bitcoin caused the crash exposed the BitConnect scam, just like Mt. Gox. Like if Mt. Gox, like if no other entrepreneur decided to compete with Mt. Gox and build a better exchange, they could still be the only exchange running and fully functional. Right? Well, they would have been exposed in this bear market, but if the price of Bitcoin kept going up very few people pull their money out at the top, and the little money that they pull out gets replaced by new money coming in. Like Ponzi schemes do amazingly well in bull markets. They get exposed in bear markets, just like with fractional reserve. So there is a correlation there, but it's the other way around. Like the fall in Bitcoin caused the end of BitConnect. Otherwise, it could have gone forever. You agree, right?
I do agree with that. But what's interesting about what you just said is, it's a chicken and the egg to a certain extent, which comes first. But what definitely happens is in a bear market, multi-level marketing schemes become evident. Ponzi schemes quickly do, but all those chain letter sort of things also do. They work until they stop working, and they stop working immediately when someone wants money and there's no money there because more promises have been made than can be fulfilled. That is true with a run on a bank. All of the action taken by the treasuries and the feds and the Indian government in terms of eliminating large dollar cash amounts is because the amount of money that any bank has relative to what they've promised and say they can pay back is infinitesimal. It's less than 5%. So all you need is 1 out of every 20 people to go to the bank and ask for their money, and there is no money there. Ponzi schemes, multi-level marketing, and chain mail schemes are all exactly the same with even less money backing them. So when the rug is pulled out, it's instantaneous. You can't plan for it. It will simply be gone. And with the Bitcoin going down and BitConnect going down, it becomes self-fulfilling. In other words, Bitcoin is probably dropping faster this time around because there are so many scams being exposed as opposed to back in 2014, where there were far fewer scams because there were far fewer ICOs. The exchanges weren't as sloppily run as Mt. Gox had been years earlier. But that doesn't mean that when each one is exposed, it doesn't hurt the prices of all the remaining, including Bitcoin. So Bitcoin can start down in a bear market, and then things can get exposed, which then drives the price down further, exposing more scams, which drives the price down further.
Yeah, it's a good point. It could create this downward cycle. Okay, so here's another good question. Actually, since we're on the Mt. Gox thing, this will be a very fast answer. Someone asks, when the hundreds of thousands of Bitcoin are returned, well, it's actually not hundreds of thousands. There's only 200,000 Bitcoin that they found. And half of that actually, I think, gets to stay with Mark Karpeles or something like that. So there's actually not hundreds of thousands. There's maybe, well, now it's more because the price had fallen. It fluctuates. Anyway, if Mt. Gox returns the Bitcoin to the people, do you think that would hurt the price of Bitcoin and make it more vulnerable for dumping? My answer is no, and here's why. The majority of the people that lost Bitcoin in Mt. Gox, remember, the Bitcoin that's given back to the people is not denominated in Bitcoin, which is how Mt. Gox went down to begin with. By the way, everything I said about Ponzi schemes and people that are mending their money and market, the price of Bitcoin going up would keep the party of scams and fractional reserve going as long as it's denominated in fiat. If it's denominated in Bitcoin, then you got the opposite problem. Like I believe like Bitcoin savings and trusts failed because they were loaning Bitcoin to Mt. Gox and charging them interest in Bitcoin, not in dollars. So when you denominate in Bitcoin and the price of Bitcoin goes way up, you need to then go out and find that Bitcoin. So the opposite is true in that case. A lot depends on your denomination of the asset, right? If you denominate your life in fiat, and even myself, most of my life is still denominated in fiat. My apartment, the food that I buy, like the airplanes, the flights that I take, the gasoline that I buy, right? My life is denominated in fiat. Now, if the more you denominate in Bitcoin and you owe someone money, then the price of Bitcoin going up is going to kill you because you owe them more Bitcoin, and that's how you get exposed. So it really depends on your underlying denomination, but that's just a side note. I'm sure you agree with that, Tyler, but we don't have to say much more on that. So my answer to if the Mt. Gox returns people their Bitcoin in the form of Bitcoin, it is not gonna, no one is actually gonna sell that Bitcoin because first of all, they're being reimbursed at a $450 price per Bitcoin, right? So if someone had 10 Bitcoins on the exchange, all they're getting is $4,500, which is less than one Bitcoin today. So that's very little Bitcoin. Also, the majority of those people are still in the space and they have already bought back in at some point. They've had 4 years to get back into Bitcoin. And I would say that the majority of those people had a chance to buy that Bitcoin back even cheaper than the price that, if they really believed in Bitcoin, they would have got back in. And trust me, if you had a bunch of Bitcoin on Mt. Gox, and let's say you had 10, 20 Bitcoin on Mt. Gox, the $5,000 or the $10,000 you're about to get is not going to make that much of a difference in your life. And your best bet to feel better about yourself and life in general is to just let this free lottery ticket that you probably never thought you would see and just let it ride. I see very few people like in a rush to sell that Bitcoin because they now hate Bitcoin so much because of their Mt. Gox incident. If anything, these people are more bullish on Bitcoin now than they were back then, and they are happy to hold on to every Satoshi someone is going to hand them over. It's almost like saying that, oh, the people that immediately sold their Bcash for Bitcoin did it in order to sell that Bitcoin for dollars. Like every one of us that sold our Bcash because we wanted more Bitcoin, It's almost the same idea.
I agree. I agree. You got to really think these things through, trying to figure out cause and effect. What does this mean, and what is it going to do? And I think you've analyzed it really well.
Okay, here's a really good question. If you have some dry powder, meaning you have some, money on the side, even like yourself, Tyler, how much, because your fund is currently in cash instead of Bitcoin, is what I meant. If you have some dry powder, how much of a percent would you buy at 5,000?
It's a great question. And I don't want to give anything away, but for my consulting clients, I'm going to tell you what I've told them because it will get out anyway. In terms of all the numbers, one of the things I find interesting about working with individuals is they're listening to my analysis. They're willing to pay for that analysis, but almost every one of them keeps asking, now can I buy Bitcoin? Now can I buy, how about it, 8,000? No, not yet. How about 75? No, not yet. 7,000? No, not yet. This could turn around anytime. How about it 6,500? No, not yet. So that tells me a great deal about what the consensus really is about bull and bear markets.
All right. You want to tell your clients, I think you should buy some Bitcoin, and the client says, I'm not sure.
Yeah, that's what I want. That's what I want. Then we know the bottom's in. So here's what I've told them. Here's what I just told someone who's taking off for a month and will be incommunicado and is completely in cash, although for a long period of time was very heavily into Bitcoin. And is very nervous about being gone and not catching the bottom. So in that specific incident, here's what I said. I said I would begin buying at my short-term target of 5,300. I would put 10% of X in. If X is $10,000 or 100,000 or a million or 10 million, at 5,300, I would put 10X in. I wouldn't buy any.
10%, not 10X, 10%.
10% of X, 10% of X, 0.1X. I would not buy any at 5,000, even though that is my phase 2 line, because I think it's going to break. So I'd put another 0.1 or 10% of X in at 4,800. I would put another 10% in at 4,600 and another 10% at 4,200. So now I'm down at 4,200. I've got 40% of my money invested. I would not buy any more, because somewhere in that range, you should get a bounce. And that bounce, hopefully, if there's a phase 2, or if Tone is correct at 49.75, we will go well back above 5,000, maybe 5,500, maybe 6,000, maybe 6,500. And now you've got the ability to lighten up on that 40% of X that you have now nice profits in. Why would you do that? Well, from a technical point of view, because unless the bottom was a tremendous capitulation below 5,000 and a very aggressive move before the end of the week above 5,000 on a closing basis, you're going to retest that 5,000 again from some level. Now, the phase 3 line was tested 11 times. You had 11 times to lighten up or to buy below that level on a week that it broke below and lighten up again when it got above it, until it was clear that a bottom was in. Well, what happened at the phase 3 line is the bottom was never in, and it gave way. And now we've fought our way all the way back down to this 5,000 target. So that's the first thing I would do with 40%. And then I would put in 20% pieces as you got down to 2,000, 1,300, somewhere between 1,000 and 1,300. And then the last 20% down below, somewhere around 750 to 800. That's the way I would do it if I was going on a trip for a month from right now. But I would do that by putting limit orders in today before I left on the trip. And I would sleep very well at night.
Yeah, so my answer is going to be a little bit different, and it doesn't factor into account a person that is not going to be in front of a computer at all. So my view on Bitcoin is different. I have a 10-year investor time horizon. So because I have a 10-year investor time horizon, I am holding everything in Bitcoin. I never really sold. I sold a little extra, at higher prices than current, but I remain mostly in Bitcoin for a variety of reasons that I'm not going to get into on this podcast. That has nothing to do with trading, okay? We're talking about trading. If you are a believer in Bitcoin for the future and you're willing to hold it for 10 years, and not like the fact that it's going down doesn't bother me. And the reason why it doesn't bother me, and a lot of people haven't figured this out yet, right? Because I have found a way to monetize in Bitcoin because I get paid in Bitcoin. So I kind of care how low Bitcoin goes because like an idiot, I denominate in Bitcoin instead of denominating in US dollars. Like I could have denominated in US dollars, charging people $1,000 to attend my workshop. Even today, payable only in Bitcoin, but I didn't do that, right? So granted, I make less fiat dollars as Bitcoin falls, but I might raise my price if it falls far enough, right? I have that option. So because I found a way to monetize Bitcoin, I'm okay holding the Bitcoin. Let's talk about traders, right? Now, when it comes to trading, your question was what percentage of X amount of money that you have ready to invest in crypto would you buy at 5,000? The simple answer is no more than 5%. The more complicated answer is it depends how it gets to 5,000 and how it bounces. I would not buy it unless certain conditions are met. So I want to point you to one piece. So the one time I did tweet out, and there is a tweet out there right here. Bitcoin fell from $3,800 on the 14th of September. On the 14th of September, Bitcoin opened that day at just under $4,000. Within 36 hours later, Bitcoin had fallen to 2,990. I had been talking about the $3,000 being a significant support point, exactly the way $5,000 is today. But back then, we were in a more, let's say, tamed bull market. And I did not expect a bear market. I expected a pullback. So properly calling the $3,000 buy level, which I did pretty much to the hour that it happened, was a lot easier than calling the $5,000 low. I had a lot of confidence on this bounce off of 3,000. And therefore, buying this could have taken on a much bigger chance, because guess what? If this bounce would have failed, you would exit your position with a small loss. Now, the moment you bounced back so strong and then made a 9 and then went higher, you can then, after, at this point, I would have recommended maybe 20 or 30%. And by the time you're back near the $5,000 range, you can go in with 100% if the 100% is what your intended capital is specific for Bitcoin in a bull market. Now, a similar thing happened when I called the $7,000 top. I pretty much called this to be the high for the year. And my advice would have been, hey, you want to be out all of your Bitcoin pie. If anything, you want to be shorting or just sit on the cash. Now, I would have recommended the same exact thing down at 5,000 as I did at 3,000. Had we made it there, but we didn't make it there, and we reversed early. Now, this was unfortunate because had we made it to 5,000, I would have once again been in the vicinity of a 9 and at a perfect prior high, which we did not make it to, which is why I always felt like we were going to get there. So in this case, I never recommended anyone to buy the dip because it reversed too early. And people still, for some dumb reason, think that I called this as the ultimate high and missed the entire bull run, which is a straight up lie. Because even though I was not able to call the dip because it didn't make it to my point, the moment the green 2 started trading above a green 1, you have to be bullish again. And if you were even remotely conservative, the moment it got back to the vicinity of 7,000 and started approaching the prior all-time high, you have to be, again, 100% bullish Bitcoin. But for some reason, apparently half the internet that was following me back in October never followed me again and never heard me say I am 300% bullish Bitcoin above the break higher than the high I thought should have happened for the year. Now, here's the problem. Every single dollar Bitcoin rose above $7,500 made me more and more nervous. Did I sell my Bitcoin? No, because I was making more and more money in fiat terms. Did I sell some Bitcoin in this area? Well, maybe. Let me not get myself in a lot of trouble here, right? But this whole area to me was a bubble. It was the hyperwave, like Tyler calls it. It was going to get erased. It was going to get erased, okay? I didn't know where the high was. I thought it can go on to 100,000, but we were going to come back to 5. We were at least 7.5. We were going to come back down there, and now we are. So I know I went off on a tangent. I'm not answering the question. So if $5,000 is being hit, like for example, right now the price is 6,500. If on Tuesday the price of Bitcoin falls from 6,500 to 4,975 in 36 hours, the way it did back in September, and my sequential system is lining up with that 9, you can probably try to go in 10, 20, maybe even 33% on that trade. But you have to keep two things in mind. First of all, if it rallies up, you want to take your profit, because I don't believe 5,000 is going to be the ultimate low. So you need to treat that as a trade and actually take your profit when it reaches certain resistance, or when the sequential system tells you that you have a 9 or a 13. You may want to take that profit. You can always go back in if it keeps going up. So you have to think of it as a trade, not a long-term investment. However, if it keeps going up, just hold on to it. Okay, the other thing to keep in mind is if the bounce fails fairly quickly and it goes from 5,000 back to 6 and then back to 5.5, you get the hell out of that trade, because the moment it goes back below 5,000, it's going to go down to 4 and in a hurry. So I would take a shot anywhere from 5 to 25% on buying around 5K. But a lot is dependent how it gets there, when it gets there, and until it goes above 12K or maybe 10K after that 5,000. I'm still going to be a believer that the bear market is with us and we're going lower. Tyler, your thoughts on my answers?
I agree with all of that. And you made a bunch of very good points, but one that really stuck out to me, because I probably misspoke about what X was. X is never all of your money. X is the amount of money that you decide is prudent for you in an asset or an asset class. I did a long vlog this morning answering questions with Leah on a bunch of questions that have come in over the past number of months. And one of the questions had to do with the size of positions. And I was very clear about that. I basically have 3 groups of clients in my fiduciary book where I manage their money: aggressive, moderate, and conservative. And basically what that means is aggressive is attempting to get about a 10% rate of return over full market cycles per year. A moderate is trying to get somewhere around 6.5% over a full market cycle, and conservative somewhere between 4.5% and 5%. Now, over history, that means aggressive is equity, 100%. Moderate is balanced, somewhere between 60 and 40%, either fixed income or equity, and conservative is almost all in fixed income, in general over long periods of time. But the reason I'm saying that is, in an aggressive account, I would never put or tell anyone as a consultant to put more than 20% of their assets, investable assets, into Bitcoin, and only at the very precise right time, with the idea that they will lighten up as profits come about. In a moderate portfolio, I would say never more than 10%, and in a conservative portfolio, never more than 5%, or maybe none at all. And that depends on who the people are and what other investments they've got and that sort of thing. Okay, so that's what I mean when I'm talking about X. X is not a percentage of all investable assets. It's that amount that a particular client is willing to put on a risk-reward basis into an asset or an asset class. So let's say you're very aggressive. I just gave you numbers of what I would put into Bitcoin, starting at $5,300 all the way down to $875 in terms of percentages. But those percentages are of your percentage of your assets. So when I say 20% for an aggressive investor, that means that 1/10 of 20% would go in at 5,300. 1/10 of 20% would go in at 4,800, et cetera, et cetera. So that, and Tone just pointed that out. That is a very important distinction. If you're putting 100% of your money in anything, in Bitcoin, in Tesla stock, even in the NASDAQ, you are not an investor. You are not even a speculator. You are a gambler. And that's fine if that's what you are trying to do. But that is not consistent with prudent money management. Figure out how much you are willing to lose, how much you are capable of losing, and how much, if you lose that amount, will not affect your lifestyle. And that amount is the maximum investable amount you should put into something at any one time.
Yeah, and I just want to like throw a little disclaimer in there. I have like, do not do what I do. Like my way towards Bitcoin, my trading strategies, they break all of the rules known to trading, because that was my inappropriate trading style. Now I was able to, well, I survived a horrendous like I would bet half of my trading account on a single trade. Like, you don't want to do that, right? And there's no, like, I know all of the horrible mistakes that I've made when I was a trader. Now, I've lost a lot of money and I've made a lot of money and I survived. But just because I was making all of those mistakes, like I was always pretty good at, guessing the price. I was pretty good at that. My stop losses were pretty good. But as far as my money management goes, it would scare people like Tyler, and it still does, considering my net worth in Bitcoin compared to my liquid assets, which are almost zero, and the fact that I'm still in Bitcoin while calling this whole bear market. This is also a reason why I don't want to manage other people's money, because I don't want to do that, right? Because now what I tell you guys to do is the right way to do it. It doesn't mean that that's what I do, but this is what you are supposed to do. That's a big difference there. Now, when I start trading again, I will not be making these videos. I'll be too busy trading. Do I want to start trading again? Sooner or later, I'll get the itch. Every 3 to 4 years, I get the itch to, start trading for real. And like I said, I've done well, and I've also made big mistakes. Overall, I've been more profitable than I've lost. But it doesn't mean I had good habits, okay? So you're supposed to be aware of that. I don't know how I got on that tangent. Just one last thing on buying the $5,000 dip. Here is the thing, right? When we fell in February, again, we fell from $8,000 down to $6,000 in 1.5 days. Had we fallen to $5,000, either from 8,000 or let's say from a lower level, let's say of 7,000, right? Let's say this candle on February 6th, let's say this candle didn't bounce all the way up. Let's say this candle closed in the $6,400 vicinity, and the following candle was going to be a 9 on the daily sequential. Oops, didn't mean to move that. The following candle was going to be a 9 on a daily sequential. And I had my $5,000 level already in place. The $5,000 level has been there since September. Had February 7th crashed to $5,000, I would have been a huge, screaming buy, because it would have reached my time point and my price point. The fact that it reversed one day early and $1,000 higher, I was not convinced that this is substantial until, the candle had already turned green and a 1 plus, 20% of the rise had already been missed. but that's okay because you can go in a couple of days later and catch the move to 10,000. That's okay. You're only supposed to buy the dip when it's perfect. But there was no way in hell I was looking for $6,000 to reverse the price. It was not any relevant level whatsoever, other than a target from the triangle, which I thought was, scary. It's not enough. You need more than one thing. You need multiple things, right? Now, had this been a dip to 5,000, I would have been screaming buy. Now, what happened here? The moment we got back to this area, there was no buy for me at all. I felt very uncomfortable with this area, and I felt very uncomfortable with all of this going up. Now, how are we going to make it to 5,000? If we crash next week straight from current levels down to this red line, yeah, I'll be pretty bullish. But if we slowly get there, the way we slowly got back to this area, there's no reason for me to be all that bullish. I'm going to expect a big breakdown. So a lot has to do with how are we going to get there, because I'm 90% sure that we are going to get there. All right, we should probably take a look at the charts. I have a bunch of other questions. I did want to see what Bitcoin price did. I mean, there's not much to say. I mean, here's the daily chart. The daily chart, according to the sequential, has not told you to buy yet. You need a price flip, which happened today. In about an hour or two, we're going to get another candle. If that candle goes above the high of the current candle, then the sequential system tells you that you can buy. It doesn't mean that you have to buy. It doesn't mean that you should buy, but it means that this one particular trading system is bullish for a long trade, and it has not yet turned. I bet you if I go to the 12-hour chart, it's already on a buy indication, and it is. This chart told you to buy at 6,300, but that trade is now in jeopardy. So because we crossed this big red line, I am looking for this area of 62.80 to actually hold the price to the upside. If it doesn't, then once again, this giant down arrow is in play. If we can hold the 62.50 area and start to bounce off of it, then $7,000 is in play. But I'm still not walking away from 5,000. So what I really want to do is take a look at the calendar, and I want to see what happened on other options expirations. So last month, the last day of the month was Thursday, the 31st. But I'm not sure if the futures. I think the futures expire on the last Friday of the month, not the last day of the month. I believe it's on a Friday. Let me make sure.
It is on a Friday.
It is on a Friday, right? So the July.
Unless the Friday is a holiday, and then it's on a Thursday.
I was gonna go to contract spec and take a look at this. When the expiration is. I have to go to the spec because otherwise, it doesn't actually say in there. So trading hours, listed contracts. Here we go. Monthly contracts listed for the nearest 2 months in March quarterly cycle. So that means you always get the nearest quarter end, though. So September should be out. Plus the nearest 2 serial months. Okay, so nearest 2 months in the quarter cycle, and 2 serial months not in the March quarter cycle. That's a weird wording. I don't know why March is so critical.
The March, June, September, and December are the key months. And then they've got that little wiggle room around the March and the non-March.
Right. So you always get the 2 nearest contracts plus the 2 nearest quarter ends.
Right.
That seems to be their thing, right? So June was a quarter end, and the moment, so as of Monday, the December is going to show up. oh, that's why the December is there, but no price, because it doesn't start trading until Monday. So
Yeah.
Monday to December starts trading. So you get the December, you get the September, and then you get the next 2 months, which will be July and August. So as of Monday, you will have July, August, September, and December to be traded. Those
Right.
4 contracts. But then when July ends, you're only going to have 3 contracts to be traded. Sorry, 3 contracts. You're going to have the August and September plus December.
Yep.
Okay, that's the, now when do they expire? Here it is. Termination of trading. London time on 4 p.m. London. Trading terminates at 4 p.m. London time on the last Friday of the contract month. Okay. I really thought this was US based time, not London time. That's weird. If that day is not a business day, if both UK and the US trading terminates the preceding day. Yeah. So it's the last Friday of the month. So there we go. So now we have our dates straight. So that means.
But wait, let's just think for a second. That's surprising to me because we're talking about 5 o'clock Eastern time on Friday when we got the spike. But
I agree. This makes no sense at all.
but that was not the
London time.
closing time. London is 5 hours
Ahead of New York.
ahead. So that would have been
that would have been 11 a.m.
right. So there goes the whole theory about the contracts and the price spike.
Well, not necessarily, right? The theory is still the same. Even though the contract, even though the June contract settled on that day, remember what we discussed earlier, this was probably a trade to be hedged with the next contract available and them buying it right at the end of the Friday, because the futures do trade until 5 p.m. Eastern time. So if the intention of the trade was to buy a bunch of Bitcoin on Friday and then hedge it on the last minute, we'd have to look at the minute by minute volume in the CME futures to see if someone hedged a giant purchase of Bitcoin at the end of the day on Friday. This actually had nothing to do with the expiration of the future, like we said in the beginning. Like they were waiting for the futures to expire so they can actually enter their trade.
Yeah, that's a great point. If you take a look on your chart at the very top, it says CME the time, and that is Eastern time, 5 p.m.
Yes.
So you're exactly right. So there's a difference between the settlement on the close of the contract and the trading of the futures.
I'm a little surprised.
Yeah, me too.
As to why. I mean, I'm quasi surprised, right? I guess it makes sense. London is really important, and I guess they felt they didn't want to make the people in London wait till 11 o'clock at night for the closing of the futures contract.
Yeah, that's interesting.
But I didn't know that. So we all learned something today.
Yeah.
So the June expired at 11 a.m. Eastern, but the spike took place at 5 p.m. Now, unfortunately, I don't have you know what? I don't want to log into my futures broker because I'm just not ready for that at the moment. I can probably go and take a look at the CME and look at the volume of the futures and see if there was a volume spike. Maybe I'll do that over the weekend or something. I'll log into my broker. I'll see if I think I turned off my futures data because I didn't want to trade futures anymore, and I didn't feel like paying for the futures quotes. But maybe TradingView has the volume. Hold on a second here. So TradingView should have the CME futures data, I hope. Let me see. Let me see if they have it. If I go make a copy and I do Bitcoin futures on the CME exchange, let me see if it exists. I'm really curious on the volume of the CMEs. I actually don't know. What is the ticker? What is the ticker? Oh, BTC is the ticker. That may be tricky. Hold on. BTC and futures. Oh, there it is. I got it. So that's the perpetual one. This is N. So N is July. So here it is. Here's the July.
N is June.
Oh, N is June. Sorry. No. I thought M was June.
H is March.
Right.
H-I-J.
No, there's no I, there's no J.
Right. So M is June. You're right. N is July.
Right, because K is April.
I don't think it is, but that doesn't matter.
I think it is.
But you're right. Yeah. N is July.
Yeah, I think N is July. Damn. Oh, wait. Volume. Let me see.
Z is December.
Yes. And Q is
August.
Yeah, Q is August, and then we have
U
is September. Yeah.
U is September.
Yeah. I don't know why they're using these. It's so frustrating. Like I used to know them like the back of my head from like the back of my hand back in the day of like Bear Stearns and JP Morgan. Volume. Let me see. Oh yeah, look at that. That's the daily. Let's see if they can give me hourly. Interesting. So volume was the hourly chart on July 29th. Look at this. It was pretty big volume from the opening bell, pretty much.
Yeah.
Like people were seriously buying those futures contracts. You know what? Maybe the 4-hour one would be better. Now, in a way, that's not surprising. There has to be a volume spike because you're rolling over your Junes. Unfortunately, I don't really have the volume for June. Unless I switch this. Oh, man.
How about going to a monthly?
Monthly. Well, I can't. There's not going to be much data here because this future is only around for like 3 months.
Yeah, but what I'm saying is that'll give you all of the monthly volume for June.
I can go to the perpetual swap, like the rolling. I can go to. Oh, I can do 1 month out versus 2 months out.
Yeah.
So here is the. Right, so we know that the last. When did it roll over? See, I don't know when the perpetual rolls over. This looks like the volume. Anyway, this is not something you should be doing on the fly.
Right.
This is certainly something you're supposed to take some research on. You're supposed to know what BTC 1 explanation point is, and that is the perpetual nearest month future. And then with the 2 explanation point, that is the perpetual 2 months out future. So what you need to figure out is on what day do they roll over? And they don't always roll over after expiration. Like on certain commodities, they roll over based on volume. So if there was a trade history where the volume of the contract 2 months out is now higher than the current contract, even though there's still a week to go to expiration, the perpetual has already rolled over because it's more volume driven than price driven as far as which contract are they tracking for price. They need what matters most to CME is liquidity, liquidity and volume and open interest, because they need to make sure that when they have to liquidate someone for not enough margin, there's someone they can sell it to and they're not taking a hit on their insurance fund. Anyway, like I've been a futures trader. It's not like Tyler, you talked about it on your show. Like if you guys think that like 100x leverage is new to the world, you don't know much about trading at all. Futures, especially options on futures, we're talking 1,000x leverage.
Yeah.
Like that's not new to the world of advanced trading.
Well, all you have to do is read the detailed story of long-term capital.
Oh, God.
Because they were leveraging T-bills and treasury bonds against other major currencies, and they were well over 1,000 times levered. And all it took was a tiny, tiny movement in price, and they lost everything. And that was 3 Nobel mathematicians.
Yep. Okay, so I'm debating which chart to look at. So this took place at 20,000 UTC time. So I believe that's -5, right? What is it now? Oh, wait, it took place later. This is a 4-hour chart, sorry. Or it took place earlier. So this is a 4-hour chart, and this 4-hour, so right now we have an hour and a half to go in a 4-hour candle. So that means this candle started at 4 p.m. And this candle also started at 4 p.m. So let's stay on the 4-hour chart and go take a look at the calendar. So this is a 4-hour candle that started at 4 p.m. Eastern time on the day of the futures expiration. We don't have a lot of data to work with, but we have enough. So the prior Friday was, so the last Friday in May was the 25th of May. So let's just go to the 25th of May and take a look. Actually, I should just do this. Oh, well, yeah, I don't need to look at external calendar. So this is the 25th of May. There it is, right? So here's your 25th of May. Where is the 4 p.m. candle? Sorry, not here it is, right? So last month on options expiration, the price did the complete opposite of what it did today, right? And again, this was my speculation in the video last night at 1 a.m. that you can't predict which side of the market the futures traders are going to hedge, assuming that this is even what drove the price up. It could have been a random coincidence, and we're just guessing the way CNBC always does.
Right.
Okay? This could have been a random, this could have been a guy going away for a month, like your client, that said, you know what, forget Tyler, I'm not going to listen to him. I'm going away for a month this Friday. I'm about to get on a plane. I'm going to buy $2 million worth of Bitcoin and to hell with it.
Yeah.
You know?
Right.
So last time it did the complete opposite, and it did not reverse for 3 days later. So that doesn't help us at all. Let's find what happened the previous month's expiration. So now we're looking for the last Friday of April, and that was the 27th. Let's go and take a look. So there it is, right? Now, so that was here it is, right? Here's the candle. And, well, this is tricky, right? Because this candle opens 1 hour before the next contract goes live. And guys, don't forget, it closes in London time. So this is when the prior contract goes away. This is when the next contract becomes super liquid. And I would say this is almost nothing. Well, it's not nothing, but like, I'm trying to remember what happened here. This crazy candle. I don't remember what news event took place on the 28th of April, but we bottomed out at 8,900. We went as high as 9,500. So that's a $500 move, maybe even $600 move. But when you have one of these Darth Maul candles, basically your stop losses get wiped out, whether you're a bull or a bear. It's one of these swings that just knocks out everybody's stop losses. And yeah, this is what you have to deal with if you trade Bitcoin. Man, what a beautiful top based on the sequential, huh?
Yeah, perfect.
And what a nice bottom based on the sequential. Okay, so this doesn't really do anything for me as far as the futures having influence. So let's go to the prior month. I have a feeling it's going to be useless as well. This is now we're going into March, and okay, so the CME is becoming more liquid, so it probably has more of an effect now than before.
Especially on the quarterly months.
Right. So this is the March expiration.
Okay,
which
so that's
is
an important one.
right. So this is probably the candle right here, and nothing happened.
Yeah.
So look, guys, if you want and here's what's here's another thing I haven't said yet, but I was thinking at the beginning of the show. Can this be long-term strategic? And here's what I mean. Because the majority of crypto traders have no idea what they're doing. Could it be someone that is setting up for some kind of a annihilation in September? Like they did this here in June. They'll do it again in July and maybe in August. And then everyone is going to assume this is going to happen again. And the same trader goes the other way with a massive position.
Yeah, that's interesting.
I'm sorry, one more thing. And in crypto, they probably don't have to wait that long. They can probably convince everyone that the same thing is going to happen in 30 days, and everyone would be long, and they're going to get smacked.
Well, it's like that sixth of the month thing that was going on for about 7 months in a row.
I didn't listen to any of that nonsense.
Yeah, but it could be as simple as what you just described, that it doesn't take very much if you've got a fairly significant wallet to play games like that, where if you do it 3 or 4 times and you're hedging and nobody knows you're hedging, so you're moving one market and you're hedging in another market, but you do that 3 or 4 times until people start talking about it. And then on the 5th, the 6th, and the 7th time, you do it again. And then on the 8th time, like this past 6th of the month, you simply pull the rug out.
Right.
Collect on all your bets.
Right. And that's not manipulation. I'm sorry. That's someone that's smarter and has more money than you that's able to do it. And another thing is, this could be just some rich guy that's like laughing right now. Haha, I did that.
Yeah.
And there's a story that Mark Armstrong says at his conferences. Have you ever attended one of those, Tyler?
I have not.
Okay. So he was saying when he was a commodities trader, and he was running like one of the biggest hedge funds, and people were like following him and like listening to him and trying to screw him. So he said, like, let's say he's like, so I have a huge position in silver or gold. He's like, I have a huge bullish position in gold. I need to sell it. And back then, it was like the floor pit traders, you got to get your quote from a bunch of people. So he needs to sell a huge gold position. And he knows that other traders know that he has a huge gold position because it's floor trading. So how do you exit your huge gold position and not get screwed? So what he said was, so here's what I would do. I'd be like, hey, what's the quote for silver? And they'd give him like a quote because they don't know, is he gonna buy or is he gonna sell? And then he's like, oh, I'll take 100 contracts. And then like an hour or two later, hey, what's the quote on platinum? And they'd be like, oh, okay, he's gonna buy some more platinum. So they raise the quote, and then he'd be like, all right, give me 50 contracts. And then later in the day, he's like, hey, what's the quote on gold? So now they're like so convinced that he's about to buy a bunch of gold contracts. They give him a high quote. He's like, excellent, sell it 1,000 contracts.
That's great.
Right. So like, again, it could be a setup for a smarter trade. You don't know.
What people have to understand is how small and how illiquid this market is. And when you have a small, illiquid market with very few people that are sophisticated in the movement of price, there are all kinds of openings for doing things to your advantage. And, I don't want to call out Phil Cohn because I really respect him as a trader. And I wouldn't be saying this if he hasn't said it over and over again on many of his broadcasts. So I'm just referring people back to Phil Cohn and his broadcasts. You will hear him say, chuckling, that he and a group of friends saw a wall at a certain level on either a cryptocurrency or on Bitcoin, and they decided to take that wall out. And then they show you doing it, where they simply swamp the size of the orders on the other side, and then it blows a hole in it, and everybody jumps into that as they sell their profits. That's simple stuff, folks. That happens all the time. It is not manipulation. It's not insider trading. It's just people that understand how illiquid markets move.
Okay, so I'm thinking of where to take the show. We're already on for like an hour and 40 minutes. And another thing I was going to talk about, which I don't know how useful it is, but someone asked me to do a Bitcoin versus gold ratio comparison. Now, I don't know how useful it is, but I can certainly graph it, and we can quickly look and see if it's useful at all or not. So maybe we can do that. I know I have a bunch of other questions, and someone is asking me about the Martin Armstrong cycles and his confidence model. Definitely not going to talk about it today, but maybe we can talk about it in the future. I don't know how much time you have, Tyler. But I do want to, I'm curious myself if there was anything in the Bitcoin to gold ratio that's useful to anyone, which is why I'm going to pull up my silver to gold ratio and then go from there. Go ahead, Tyler.
Yeah, my comment before seeing this is I would doubt that there's any evidence of a correlation or inverse correlation between gold and Bitcoin. However, I do believe, strongly believe, that we are going to see that correlation in the future, and it's going to play a very important role. So regardless of what we see now, I think it's a great question, and I believe they will be very correlated, probably in an inverse direction at some point in the future.
All right, so let's go and take a look. I'm gonna save another chart, make a copy. We're gonna do gold to Bitcoin, and because I'm tired, I'm not sure if it should be gold to Bitcoin or Bitcoin to gold. I think I'm gonna make it Bitcoin to gold because Bitcoin, it has the higher price, so Bitcoin divided by gold makes more sense.
Yeah, I agree. But it might not at some point in the future.
Correct. And I'll probably want to take a look at my ratios, BTC versus GBTC again. But I hate that 2% management fee. It skews everything because it's so freaking big.
Yeah, it is.
It just says gold, silver. That's weird. I guess the ratio exists. Oh, okay, the ratio exists. That's why. So I have to do this manually. So I have to do, and now I have a problem with the price of Bitcoin. I guess I can use the index. No, but it has daily data. I'm thinking of what to use for the price of Bitcoin.
Yeah, that's tricky because of the days difference.
I guess Bitstamp has the longest history. And now I can divide that by gold. But what should we use for gold?
How about the continuous contract?
You want to use the future?
Near term, yeah. Yeah, the continuous contract. Is there one there?
Wait, what's the ticker for gold again? Is it SG? No, wait. Well, what? I've been on in front of a computer for too long. I thought it was GS.
I thought it was too.
Hold on.
There we go.
No, it's the gold silver ratio.
Yeah, but it flashed something that said gold right before this came up. Right there, gold
Oh,
future.
GC. My bad. My fault. That's totally my fault. It's GC, not GS. My bad. So Bitcoin, in cryptocurrency, Bitstamp, and GS. No, GC
GC.
in futures. There we go. And I used to trade the gold contracts. It's a wow, amazing how much you forget when you don't trade for a couple of years.
Absolutely.
Start to forget all your tickers.
Right.
So this is the weekly chart. I think we can go daily. And you know what? Bitcoin is just so much more volatile than gold. Like this looks like the price of Bitcoin to me. Like
yeah. Yeah, I agree. That's
like,
what I thought it was.
Like there's absolutely no point because compared to Bitcoin, gold hasn't moved. It's almost like, Bitcoin versus the dollar.
But it's very interesting because this has gone from a 15-to-1 ratio down to a 5.
Right. It's down 33%, while it's down 2/3 instead of 4/3. It's down 2/3 instead of 3/4.
Right.
So,
but it's also interesting how you're getting that triple bottom, the exact same as you're doing with Bitcoin. That's I'd like to play around with that. That's an interesting study. I don't know what it means, but it's interesting study. You've also got a couple of moving averages on there, the 150 and the 200 that had a death cross.
Yeah, I have a 50 and the 200 on here. I'm curious what happens if I put my indicator up on this.
That would be interesting. Yeah.
Too much noise. Hold on. Better. Caught the peak, the earlier peak, missed the ultimate peak. Caught the bottom well. Caught the bottom well again. And called the swing top, and we're on a 2.6 right now.
That's interesting. Also, what's the date of the death cross there?
It's a 50 versus 200.
Yeah.
And the date is 22nd of March.
And what is the death cross on just Bitcoin?
So the daily,
that was the 22nd of March.
Yeah, but that's that's the 50 versus 200. So here, that would be the 30th of March. So just a week apart.
Interesting. But you're right. The big factor here is the volatility of Bitcoin and the relative steadiness of gold.
Right.
But I'd like to go back and look at the run up from up to 1900 on gold.
Yeah, but you can't because Bitcoin, it was 2011. Like Bitcoin had barely any prices.
Yeah. So then maybe the down move from 1900 to 1100.
Again, that was like 2010, 2011. Like Bitcoin, Like I find all analysis of Bitcoin so difficult pre-2013. It's almost like pre-2013, Bitcoin is useless.
Yeah.
And post-2013, gold is useless.
Right. Well, still, I think it's going to be an important thing in the future. So I'm going to start watching it.
Now, what I would like for someone to do is maybe someone can write like a manual formula where you are using 3-day candles for gold and 1-day candles for Bitcoin, speeding up gold's decade into 3 years and comparing it to Bitcoin's last 3 or 4 years.
Oh, that's interesting. Yeah.
And then you can almost match it, right? So compare 3-day candles on gold to 1-day candles of Bitcoin.
Yeah, interesting.
Which I don't know if I can do that, like especially right now on live air.
Right. Yeah, that's tricky stuff.
Okay, so I mean, I don't really have anything else to say on the price of Bitcoin. Let's close this. I guess I'll leave this for future reference. Other than we have to wait. Personally, I think this is nothing. I don't think that this upswing will have any relevance whatsoever a month from now or even a week from now. And I can't see this reversing the price permanently. So there's nothing really more I can say on that front. I did hear what you had to say, Tyler, about the S&P 500 and stuff. We might have to do another video. I don't really want to get into that either. I have a bunch of questions. Let me see if any of these questions are useful. Let's see here. Do you think the ETF approval will correspond with the bottom? Are the pending ETFs a game changer for the bear market? Now, I think there is no way in hell the SEC is going to approve a Bitcoin ETF at the bottom, because at the bottom of the price of Bitcoin, the way Tyler and I are expecting the bottom, people will curse the fact that Bitcoin exists. So the last thing that the SEC is going to do is to create the ETF, right? So you had a lot better chance of getting that ETF of Bitcoin above $10,000 on the upswing than you do anywhere along the bottom. Like, it doesn't make sense when ETFs don't come around on assets that have been in bear markets. Like, it does. That's not usually how it works, as far as I know.
I would agree. I would agree with that. And the SEC still has got to do one more thing to complete their assault on the cryptocurrencies. That is, they've got to define precisely why Ethereum was excluded and give a formula, and then pick out another 8 or 10 or 15 other cryptos and include in that formula, or not. They've got to do one or the other. And they're not going to approve Ethereum ETFs, or even, I agree with you, even Bitcoin ETFs, until they've taken that next step. And they've got to do it. They have to do it.
I think the SEC has a bit of a cover when it comes to Ethereum, because they can say that there's no way we'll do an ETF until we see a mature futures market in this commodity. So at least the SEC can like push off their decision onto a prerequisite being the CFTC. Like, they can't use that excuse for Bitcoin. So they'll have to come up with other metrics as to why they're not doing a Bitcoin ETF. But it's so easy for the SEC to avoid the Ethereum question and say, we've never had an ETF on a commodity until that commodity had a robust and liquid futures market.
But what's weird is they put the cart before the horse with GBTC.
Oh, they totally screwed up. And I think Barry Silbert somehow screwed them, and just like the creators of Ripple, they're stuck with something they wish they never did.
Yeah, I would
My
agree.
Ripple token. Sorry, let me clarify. The
Yeah,
creators of the Ripple token, which is the Ripple company, I don't care what the Ripple company is saying. They're just trying to walk away from the token, saying we didn't create it, which is
yeah,
ridiculous, right? Now, I think that the SEC are stuck. I mean, the SEC is trying to ignore the fact that GBTC gets traded by investor managers like yourself and the common person. I think the SEC really screwed up.
yeah. It's funny because it gets into that whole thing of what are called exchange traded products, exchange traded funds, and exchange traded notes, and also one other thing called a closed end fund. All of those things have been approved many times over by the SEC over the last 30 years, 40 years. So they're very familiar with having what's called a closed end fund, which trades at a very big discount or a very big premium to the underlying assets. And I think in their mind, what they did is they approved something that looked very similar to a closed end fund, but was actually an exchange traded product. And I would think they would do that again now with Ethereum under the exact same format they did Bitcoin, with the simple explanation that both have been deemed not to have been illegal securities. So there's the possibility in my mind of, before we see a Bitcoin ETF that does not trade with a premium or a discount, we will see an Ethereum ETP that trades like the GBTC does for Bitcoin.
Hey, Tyler. So someone in the chat was begging me to pull up an exponential moving average set of 14, 23, and 50. And I'm looking at it. And I'm not really finding the 23 useful at all. But if I get rid of the 23, and only make it 14 and 50, it's starting to look a little more useful. Thoughts?
It looks great in the bull market. It's interesting in the bear market in that the shorter term moving average comes back up to the longer, price continues higher, but then collapses.
Right, but it collapsed in a kind of like a steady way, so it doesn't really. Even though there was a bullish crossover that didn't last very long,
Yeah,
it gave you like it didn't crush your portfolio. Let's put it that way.
right.
You had plenty of time to get in and get out at approximately the same price.
Yeah, yeah.
And the 14 exponential seems to be supporting the price pretty well in both bear and bull.
Yeah, it does look. I'm looking back into September of 2017 on that big correction.
Let me make it a little clearer. Let's do this. Blue is the price. Blue is the daily closing price.
Maybe make that gold one like bright red. Yeah, that's good. Okay, so yeah, when you look back at the sell-off in July and August of 2017 in the bull market, you did get a negative cross for a very short period of time. But other than that, they came together in the October sell-off and then didn't really cross over until the top, after the top. So yeah, they're pretty interesting. I'll take a look at them from a Consenso point of view.
I'm generally not a huge fan of exponential moving averages, but
I'm not either, but I can't give you a good reason why. It's just
that's a good point. Neither can I. All right, let me go back to what I had, which was, what did I have on the daily? I had the 50, the 128, and the 200.
yeah.
Simple, and check that, and that's it. And candles. All right, we're back. Okay, let me look at the other questions. I think it's too late for this question because it's unrelated to trading and it's going to be a very long answer. I'll read the question. I'll try and remember it for next time. I heard you mention the term decentralized company. Would it ever be possible to actually have a decentralized company? If so, which industries would be possible? My short answer is no. My long answer is probably no. But we're not going to get into it today. Like, if it's a company, it can't be decentralized. I don't think you guys understand the definition of decentralized. Decentralized means it's not a company. There's nobody in charge. That's what decentralized means. So you can't actually have a decentralized company. But anyway, it could be a longer answer than that.
Yeah, it's a very long answer, and it is relative to your personal definitions of centralized or decentralized, and it's really political. It's not financial. The whole intent of all political movements in the past, all of them, is to get away from centralization, to get away from kings and queens, to get away from despots and dictators, to get away from oligarchs, and to decentralize from one to many. There's only one system that has done it as well as all the other systems, or better, and that is in the US under the US Constitution. And it is still tremendously centralized. It gets very centralized when Democrats are in power, and it gets less centralized when Republicans are in power. But think about all the other movements around the world, from utopian societies to the communists. Read Karl Marx and see what happened from supposedly tremendous decentralization away from czars to what we have today with Putin. Take a look at the Chinese definition of communism. Take a look at what socialism has said it's going to attempt to do, and then what it's actually accomplished. And go through that whole list of things, and now flip it to finance. Now flip it to the difference between Bitcoin and all the other cryptos. And you begin to get a sense of what centralization and decentralization means. Every corporation, by definition, is highly centralized, because there's a CEO, chairman of the board, and then there's a board of directors, and there's a board of trustees, and there's chief officers, financial, operations, IT.
Right. And here's the thing. And just because you decided that the 100-year regulatory structure on creating securities to protect the investors of those securities does not apply to you personally as the creator of a company, it doesn't mean that you're not a security.
Exactly. Exactly.
So just because your company doesn't have a CEO because you don't like the titles that the generation has given doesn't mean that you're not a company. But anyway, let's move on. Let's see if there's any other good questions that we can go through quickly. So another question that's going to be very, very short to answer. What would have to take place for you to lessen your maximalist views? What do you need to see in another project? Guys, you really need to go and read Saifedean's book. Bitcoin is the replacement of money. Bitcoin is decentralized. Bitcoin is not a company. Like, I have no interest in the companies in the space unless I'm investing in them as companies. And the only companies that we can think about investing in is maybe an exchange that's, doing it right, or mining operations, right? Like chip manufacturers that are doing it right. Like the guy selling the shovels, not the guys using the shovels. Like those are companies, like they're the real companies. And they can't be ICO'd because that makes no sense. So it like Bitcoin maximalism, it isn't about like the rest of the projects just don't make sense. They don't make sense. It's like believing in parallel internets. It just doesn't make sense. Go and read Saifedean's book. He will explain it to you. All right, let's move on to another question. Because clearly, if a person is like, again, the word maximalist was invented by Vitalik Buterin to demonize people that knew what they were talking about in order to sell you Ethereum. Like, just go back to the history in the crypto space. All right, next question. Okay, another weird question. Tone, do you see a future where Bitcoin is a productive asset and in a way without suffering counterparty risk? Guys, Bitcoin has no counterparty risk already. Now, if you are trading Bitcoin on an exchange and someone is holding your Bitcoin, there is counterparty risk. But Bitcoin inherently has no counterparty risk. It's pretty much like gold. Gold, when you're holding it, has no counterparty risk. Bitcoin, when you're holding it, has no counterparty risk unless you're going to claim that Bitcoin Core is a counterparty and they can, screw up in their next release. But there's no counterparty risk there inherently. Counterparty risk is on how you use the Bitcoin.
Yeah, great point. Gold has no counterparty risk unless you're storing it somewhere that you cannot trust, or you're trading it on an exchange where you have to deliver it, and that exchange is corrupt, and people steal stuff that get put on the exchange. Or prior to 1971, the counterparty risk was that the US dollar would be weakened because of bad policy running deficits. And the counterparty, in this case, France, decided they didn't want to hold US dollars anymore. So what they did is they turned them in for gold. All three of those cases are counterparty risk. Bitcoin has a lot of counterparty risk if you're trying to hold it on an exchange or hold it in a wallet that is full of holes and is porous and can be hacked, or if you're trying to transfer it from one party to another, and one of those two parties can't be trusted for whatever reason. If you are simply holding it in cold storage, the world can do anything it wants, and you have no risk with that.
Hey, we got another really good question. Came in with a nice tip. Thank you, Ben. You just skipped the line right to the front. Sorry, I got so we didn't address Bitcoin as a productive asset. Bitcoin is not a productive asset. You don't want Bitcoin to be a productive asset. If Bitcoin is a productive asset, then it's not doing a very good job being money and a safe store of value. Like Ethereum is a productive asset according to the people that want to buy CryptoKitties. And the fact that Ethereum is both a productive asset and is trying to be a currency is a major problem for Ethereum. Again, please read Saifedean's book. I can't recommend it enough. Gold's function, the fact that gold has industrial qualities, the fact that gold could be a productive asset actually hurts it as a medium of exchange and a monetary store of value. It doesn't help it. It creates an additional variable that screws around with the stability of its price mechanism. Tyler, your thoughts?
The dream of Bitcoin and why it is such a remarkable experiment is it has the potential to become the most productive asset in the world, but right now it is not. And what I mean by that is,
I think we're interpreting the word productive asset differently.
well, I think we are, but let me just expound for a second by saying what is going to happen, in my opinion, is Bitcoin is going to destroy all of the other cryptocurrencies. And it is going to move back from 38% of the market cap to 100% minus Ethereum. And then it's going to be a store of value and money, real money for more and more people. And one by one, it will begin destroying the weak currencies. And those weak currencies will be flushed out. And the stronger currencies will then be under attack by Bitcoin. And someday Bitcoin has the potential to be the only method of exchange on a worldwide basis. The process of getting from where we are now to where the dream says we can get, and I can build a strong case economically why that would happen, is to me the most productive asset possible. And it's what differentiates Bitcoin from everything, including Ethereum.
Right. So, so I took the concept of a productive asset very, very literally. So let me just, oh, wait, I didn't mean to, I meant to do the opposite of that. So someone also asked me what those dotted lines are. So I just zoomed in my chart so you can see labels on the things in the indicator. So read those. So for me, let's say when you're using cows as money, a cow is a productive asset because it gives you milk and you can eat it. And I don't know, maybe it like mows your lawn as it walks around, right?
And you can breed it.
Yes. So cows are a productive asset. So you don't want cows to be money. It's very inconvenient because they're also a productive asset. So at any moment in time, I mean, cows are a little too big, right? Let's think of something smaller like a chicken, right? So at any moment in time, you have to decide, do I want to keep my chicken to keep laying eggs? Do I want to eat my chicken? Or do I want to trade my chicken for something else? That is way too many decisions that a person has to make. So when you're holding Ethereum, you always have to make a choice. Do I want to hold Ethereum for its appreciation and value as a stock of the Ethereum Corporation? Do I want to use the Ethereum as gas and destroy it in order to buy an ICO, which is also a stock of a company? Or do I want to treat Ethereum as money to buy goods and services? Now, when that happens to a project like Ethereum, and this is why I disagree with Tyler, and Ethereum is going to fail long before the SEC eventually decides it's not a security, is because everyone programming for Ethereum is considering Ethereum to be a different thing. So 3 developers of Ethereum can all be thinking of Ethereum as a different productive asset, plus the fact that they want it to be global money. You do not want your medium of exchange to be a productive asset. And again, please go read the Bitcoin Standard by Saifedean, where he explains this. The less Bitcoin is useful for anything other than money, the more successful it's going to be as money.
I agree completely with that analysis, but I still think the most exciting thing about Bitcoin is getting from where we are to where we could be. Once we get to where we could be, it becomes the perfect money and the perfect store of value. But up until that time, it needs to convert all of the barbaric relics of finance, including gold, but certainly fiat currencies and barter, the chicken and the egg sort of a thing. The reason silver and gold became, according to Saifedean and many, many other economists, in the position that it was for thousands of years is because everyone, those with chickens, those with figs, those with fish, those with productive assets, was willing to turn them in, not for other productive assets, a chicken for a cow or a fig for a fish, but everything for gold or silver. And that made its mark. And then we began to degrade that concept by jumping into the paper side of things that are simply IOUs for gold or silver until we got off the gold standard. And now all we have is paper IOUs. We promise to pay you back. So I see this as a 3-step movement from where we are to where we have to go. First of all, by eliminating all the nonsense in the crypto space, to where we can get where it becomes an accepted means of transfer of all other assets, all other fiats into this one thing. And I think that is what Satoshi had in mind from day one.
All right, so here's a question. Ben, sorry, getting to you a little bit late. It's a good question. And I don't know if I should answer first or I should let Ty answer first. Ty, have you read the entire Bitcoin Standard yet?
Yes, I have.
What'd you think? Excellent, right?
Spectacular. It's wonderful. He's a strong economist, which is important because a lot of people writing about Bitcoin don't have that background. But he's the only economist that has gone into that depth about Bitcoin. So that's what makes that book so unique.
All right, so here's a question. If Bitcoin is the replacement of money, people will demand choice. There's no way on earth Bitcoin will be the only decentralized currency on earth. People want choice. They will reject Bitcoin totalitarianism, Pepsi and Coke, Pepsi and Coke. Do you want to disagree with this or should I?
Yeah, I will disagree with it very quickly. Bitcoin does not replace choice, even in the 3rd stage where it replaces all fiat currency. I will still trade chickens for figs with Tone. That's my choice. I've got too many chickens. He's got too many figs. You don't have to go through that 3rd method. So all other choices are still available. People are going to still treasure gold for its qualities. Gold and silver will not go away. They are not going to go to zero because...
Okay, so Ty, you're going off on a little bit of a tangent. he specifically said there's no way on earth Bitcoin will be the only decentralized currency, right? Everything you've named so far are more centralized. Gold and silver are also centralized because you're not going to use them in person. So if you have another e-gold, it's centralized. If the government brings the gold standard back, it's still centralized. So he's specifically talking about these. So he's saying that Bitcoin will not exist on its own. Litecoin, Monero, and a bunch of altcoins will be there because people demand competition.
Okay,
I can demand choice. Sorry,
I can answer that quickly. There will be only one decentralized currency, and it will be Bitcoin.
I agree. And once again, I have to go to Saifedean. He talks about this in the book, right? I mean, if you guys are going to ask questions that were beautifully answered by a PhD economist in a book that only costs about $15 or $20, it's very much worth your money and your time. So, it's the same reason I go back to the internet example. People don't exactly demand choice of multiple internets. They want to go to one place with one computer and find everything they need. Like when I go, at me as a merchant, like when I go to certain countries, I don't know, maybe Morocco or something. When I go to Morocco, or maybe not Morocco, but when I go to countries in certain regions, they will sell me what I want in their local currency, in dollars, and in euros. And trust me, the guy running the stand does not want to stand there with a calculator giving you 3 options to pay it. He wants to accept one thing that he can then reuse and as a store of value so that he doesn't have to about it depreciating. Trust me, he would only accept the shitty currency of a third world country, but he wants to take your Bitcoin, your dollars or your euros because he knows they're more secure and he can then liquidate them. If Bitcoin is the best choice and everyone has Bitcoin, he will only want to accept Bitcoin. People want to use a single currency all around the world for simplicity and ease of use. Now, the reason you have Coke and Pepsi is because they're advertising. And I mean, I don't drink either. I think they're both terrible. But people don't demand it, right? It's that you're being convinced to use it. All of these altcoin pushers, the Dash guys, the Digibyte guys, the Litecoin guys seem to have gone away. But all the new ones are coming up. The Zcash people, they're all trying to convince you that their company has a better decentralized currency than Bitcoin, and that's ridiculous.
Yeah, no argument at all. I just agree completely. Gold and the US dollar were the only currencies of the world for decades. And it's because everybody trusted the dollar around the world. They still do today. And when the two split, even though the price of gold went up for a while, it also went all the way back down to $265 before starting this move up to 1900. The dollar has been very, very stable. You don't want something that can go way up and way down relative to everything else. You want everything else to go up and down relative to something. And that something may very well someday be Bitcoin.
And and Saifedean also explains the only reason why silver was ever money was because gold wasn't divisible enough for micropayments, and that disappeared when gold became infinitely divisible with paper money. Even during the gold standard, but the technology allowed you to have paper money backed by gold, and computers came around, so you can make micropayments with gold. And a micropayment, again, your cup of coffee, you can make that cup of coffee with gold now because you can subdivide gold. Granted, gold will have to be centralized for that to happen, but that's okay. And that's why silver will never be money again, even if the gold standard comes back, because gold can now have micropayments on its own. And if Bitcoin can have micropayments with Lightning, there's no need for Litecoin. Other than a test net, to get code in or something to test it out on something people believe has value, so that, creates that potential attack vector. I'm just going to pull up something real quick on Bitcoin monthly chart. Someone asked, when will the yearly chart become relevant? And it's very, very easy to answer, because all I got to do is open up the yearly chart. And this is as far back as I can go on the yearly chart. And it takes me back to 2010, assuming we have a price of Bitcoin in 2009, you can move the numbers back. But I think assuming that Bitcoin was worthless in 2009 and Bitcoin picked up a price only in 2010 is okay by me, which means that we still have 4 more years before the yearly chart of Bitcoin becomes something to be paid attention to.
Wow, that's interesting.
Now, the quarterly and the monthly charts, that actually I haven't looked at the quarterly in a while. Quarterly is a 3-month chart. The quarterly actually topped on a 9. And we're dealing with a 1 to 3 quarter pullback, and we are in quarter 2 of a 1 to 4 quarter pullback. And if we go to the monthly chart, which I guess we've turned over, right? Well, today's the 30th, so we turn over tomorrow. So yeah, this is not good, right? Because look, you clearly have a red number below a prior red number. So based on a monthly chart, you are looking at 5 more months of downside, starting with, July. So that means you have July, August, September, October, and November. Like I said on my Cheddar interview from the stock exchange the other day, I am looking for a bottom in price in October, November, which could be the 9. Now, what I don't want to see is a 9 followed by a 1 to 4 candle correction, kicking off a countdown on the monthly chart. That would be disastrous.
Very interesting.
All right, let's get out of here. All right, I want to finish up with questions. Let's see if we got anything else that's good. Can you go over the current FIB, I guess that's Fibonacci levels, from the recent pullback to the $5,700? Was that an important area? Okay, I don't want to spend too much time on this. I'm just gonna go straight to my weekly chart. And or maybe we can use the monthly chart. Hold on. I think the Fibonacci levels will look really good on a monthly chart. Now the question is,
yeah, where do you begin?
Where do you begin, right? So I'm gonna go through that in a minute, real quick. So let me just grab the Fibonacci replacements. Now I have been using my Fibonacci replacements from the 2015 low up to the recent high. Okay, that puts my 76% Fibonacci line right at 4,800, which is, within margin of error of my $5,000 top. Okay, now these are my Fibonacci levels. I go all the way down. Why does that say 100? Oh yeah, $163. That's right. Now Tyler,
I start mine at 1,000.
You start yours at 1,000, right? So let's go to 1,000. I don't have 1,000. I have 985. That's close
good.
enough.
Yeah, that's good.
So here it is from 985 to the top, and your Fibonacci 76% is at 5420.
Yeah.
Okay. Now here's the thing. I am not, a huge fan of the 76% Fibonacci line. I don't normally care for it. My favorite Fibonacci line for retracements is 38%. If you go lower than 38%, you're in trouble. Like your pullbacks should not be more than 38%. Now in Bitcoin, they've been bigger. And here is the thing. If the 76% Fibonacci doesn't hold, And that's a problem. That's a big problem. Like when I look at gold, here's the weekly gold. In gold, that is the 76% Fibonacci, which held gold up off the lows, because I'm taking the high point is the all-time high in gold. The low point is the 1,045. Gold held the 76% Fibonacci line perfectly. But Tyler will agree that gold is like maybe $25 more to the downside by putting this in jeopardy.
Yeah.
So even though it held back in 2016, it never settled well with me. If gold had, held the higher Fibonacci retracement, I would have always been more comfortable. It always bothered me. I never felt like gold bottomed, ever. Like if you go back to my oldest videos on gold, that probably started back in 2015 or 16, probably 16, on World Crypto Network, I was always uncomfortable with calling the low in gold being 1045. I would have called it a bottom upon a breakout of 1400. If it would have broken about 1400, that's it. The decade low is in. But for now, I am still skeptical that the low is in, because I don't think this will hold. So I'm not a big fan of the 76%. Now, what are our other options on Fibonacci's, right? Where's my monthly chart? So the other option on the Fibonacci is, there's really no other big lows, right? Like we have to now go lower than that. So now it becomes a bit problematic. We can go to the $2 low. So we can start from 0, right? We can go all the way to that 1 penny should not probably be there. I was going to go to the $2 low of 2011 on the 88% correction. And it's not going to make that much of a difference, to be honest with you guys. The difference between $800 and $2 is not that much. So this takes us to 46.65. So even if you use the worst case scenario of $2, so you're at 46 instead of the 48 that I have. Like it's a $200 difference. Something Bitcoin can do in a couple of hours. So
or the 5,400 I have. All of those 78% numbers are so close together.
Right.
And you and I both agree that 54 is not going to hold. So the 1,000 is going to be using 1,000 as the base. The 78 is going to be penetrated, in my opinion, and in your opinion. Right. And I think in both of our opinions, the 78, either with the $2 starting point or with your $163 starting point, will be tested.
Right.
So,
right. Well, sorry.
I agree with that too. So the only question is, will the 78.6 hold? Meaning on a closing basis, either monthly or weekly. And I think that's an important question. Even though you don't think 78.6 is particularly useful, I think it's useful only from the perspective of if it is violated, when any Fibonacci line, and they all are hit over and over again in the up move and in the down move. And then what happens is they go through these funny periods where they're bouncing back and forth between two lines. Well, there's no more lines to bounce back and forth once you break 78.6 except 0. So it becomes important in the bigger existential question of where the heck is the bottom really going to be on this thing?
Right. What people have to realize is we're coming down from a $20,000 level. So the difference in your retracement of going 19,000 or the entire 20,000 is really a couple of $100. Like don't get into this thing of pinching, drawing the thinnest lines of moving averages and trend lines. Like these are thick lines. They're not meant to be traded by pennies. All right. Wow. This is going on 3 hours now. Let me just glance at one more question, maybe. Oh, are there trading bots for retail investors? No. Tyler?
Yeah, there are, and they're pretty useless.
Okay. I didn't mean it that way. All right. Sure. There are lots of trading bots. Should you invest money with them? No.
Right.
Okay. Next. At what price does Bitcoin need to go up to before you reverse your view on 4,975? I would say $12,000 right now. So I would need to see probably a month end close above $12,000 as of right now for me to give up on 5,000. Now, if we hit 5,497.5, I probably would be okay with a monthly close above 10,000 to start considering 5,000 to be the bear market low. Is that reasonable, Ty?
I would be almost exactly in the same position. The 11,750 bounce high needs to be taken out on a closing basis for there to be a reasonable chance that we're going to take out the all-time highs, in my opinion. Until that occurs, I will be skeptical because I've got a group up around 10,100 and 11,100, 11,175 that are massive in my mind. So I would agree that I might start putting people into Bitcoin through GBTC with the close over 7,500. A small piece of a small piece of X. Only because I doubt very much it can get that high. So if it does, I'm going to be very, very impressed. And on the downside, I would also agree with Tone. Just because 5,000 is hit or 4,975 or whatever in that region, or let's just say the 78.6 Fibonacci, depend on how you're doing that, which falls into that same range. Any of those three things, just because it's hit, does not mean that's the bottom of the market. And it does not mean that we can't go up strongly, but I doubt above 7,500 before we come back down and test it a number of times. And if it holds that, then terrific. If it does not hold that, then we're going to see much lower numbers.
Right. So basically, I would probably mandate a 100% rise in Bitcoin before I call the bottom. It becomes a lot easier to get 100% increase from $1,000 than from $6,000. Remember, we moved from 6,000 back up to 10 and now fell to below 6. From 5,000, we would need to move up to 10,000 to get 100% correction. Now, you guys might think it's weird, and I've explained this on this show with Ty before, that you're going to miss 100% move. And my answer is hell freaking yes. If the price reverses from a point that I did not anticipate, I would need to be 100% sure that the market has reversed. And I am not 100% sure that the market has reversed, especially one as volatile as Bitcoin, until I get 100% move. Because guess what? It's not important to me to catch $5,000 Bitcoin going up to $10,000 Bitcoin. What's important to me is catching the $15,000 Bitcoin going to $50,000 Bitcoin. And I need to make sure I have the money to do that.
That's the definition of money management. That's the important concept. is the probabilities of those things happening. You've got limited resources and it's easy to screw them up. So you don't take the chances with limited resources. You only take the highest probability trades. And as they develop, the risk actually goes down. It doesn't go up. Above 12,000, the risk does not go up for Bitcoin. It goes down. Above 20,000, it does not go up. It goes down. It gets less and less risky as the technicals begin to take out highs. At the beginning, when you're in a bear market, and even those big believers in the higher prices have got to admit that as of today, we are in a bear market. That is high risk for a long position. You don't want to get into it until the probabilities shift.
And where was I going with that? I don't remember anymore. But right. So therefore, now if Bitcoin comes down all the way to 3,000 and lower, I will be more inclined to assume that that price is the bottom, because there is a lot less risk on the downside, right? So I am probably like, so to an earlier question, I said, how much would you risk on a $5,000 dip, speculative buy the dip at 5,000? I said anywhere between 5 and 20% of my Bitcoin intended investment capital based on how we get to 5,000. But at 3,000 and lower, those percentages are higher. I am now willing to risk between maybe 10 and 30%. At 2,000, I'm willing to take a chance on maybe 25 or 50% of my Bitcoin trading capital, because at that point, there's not that much it can go lower. And if it does, I can double down.
Exactly.
So you got to keep that in mind. And of course, everything that Tyler and I are discussing is a non-leveraged position, because if you enter Bitcoin with all your money on a 2x leverage at 2,000, you can get wiped out at 1,000 and you will not even be able to double down.
Yep. Very important. Position size and timing and money management. That's what drives everything in terms of success. All the other details about how you arrive at those conclusions is where all the work is, all the work on the fundamental and the technical analysis to understand the risk versus the reward. But once you've done all of that, your job's not over. Now you need to take those 3 steps. How big of a position? What is the probability of success? And where is my stop limit? One of the things that attracted me to Tone's intellect relative to technical analysis is his demand to always set a stop when you put a trade on. That absolute discipline will keep you from losing large sums of money. That's what money management's all about.
And in my experience, the worst losses I've ever done is when I said, you know what, let me take off the stop loss just this once.
Yeah.
Those were some of my worst decisions in the history of my trading. And yes, I've done it more than once. We all have.
Yeah.
Maybe not Tyler, but, or maybe.
Yes,
what?
I have. I've done this for 40 years. And the first 20.
Right. I was going to say earlier.
I made every mistake everybody makes.
Right.
Because it's human nature.
Right. And I would be a way more disciplined trader if I was trading other people's money, but I just don't want to, because it's too boring for me. Trading other people's money responsibly is actually one of the most boring jobs you can have, because you're supposed to be so disciplined that, like, as far as trade execution goes, it's a lot of analysis, but trade execution is mechanical. It's not instinct. It's not feeling. It's not, I'm going to take off the stop once. It has to be mechanical, or you will lose other people's money. And then you're not going to have a very good life.
Very true. Very true.
Okay, so we have a follow-up. So the person didn't like our answer about people's choices when it comes to money and them not wanting a choice. So the person sent a follow-up saying, he's saying you can't compare Bitcoin to the internet. And this is a great example, right? So he's saying we have air transport. You can't compare air transport with United Airlines. The internet is a fundamental like transport. The part on top are where the choices lie. And I agree with that 100%. And I love your analogy. You have transport and you have United Airlines. You have Bitcoin and you have all of these companies like Zcash and Monero and Litecoin are in this like gray zone in between, right? But you have Zcash and Dash and Ethereum and EOS and Digibyte and all these other companies. Please go choose those companies. You're investing in the future ability of those companies to provide a service. If that service is giving you a medium of exchange, it is still centralized by a company like United Airlines are providing you in the transportation space. You, Ben, I'm sorry, I know you're tipping with these questions, but you seem to have a huge confusion of what is decentralized and what is a company. Zcash is not a decentralized currency. It is a company with Zuko as the CEO. And that's not a fundamental technology breakthrough. That is a company that you can choose. And Zcash is out there competing for sponsorship and speaking gigs against Dash, which is another company. You can choose between them. You can use another company's medium of exchange, but they're not on the same playing field because one is a company and one is a decentralized protocol. I don't know how else to explain it. All right, let's see what else we got. All right, one more tip, comment or question. Let's see. Are the programmers currently working on Bitcoin technology to make improvements? If so, how are they paid and who decides who's allowed to work on them? That is a very basic kind of question. I know it's an important question. It's not really related to trading Bitcoin. So developers work on Bitcoin every second of every day. In fact, developers work on Bitcoin 20 seconds of every second of every day because there is more than one developer. There is probably 100 developers, and you have to assume that more than one of them is working on Bitcoin at any given moment in time somewhere in the world, okay? So it's more than an every second operation. Anybody can work on Bitcoin. You can work on Bitcoin. You can submit your BIPs, your improvements that you think Bitcoin needs. You can also review other people's improvements to make sure they don't have bugs, which is the main job, actually. There's like 90% of the work is checking other people's code that are smarter than you that have wrote it. But you have the ability to read their code and help. And about 5 people have a key to actually upgrade the Bitcoin protocol with the changes that anyone can propose and anyone can code. But only 5 people have administrative privileges to update the code, and then anyone can choose whether to download that code to run their latest node. Improvements are being constantly made. In fact, improvements are being made so fast that it's hard to release the improvement from last month, because last month improvement has been improved so much that you want to delay releasing the improvement because the improvement has been improved. That has been a huge plague recently in the world of Bitcoin. But who pays them? Well, the majority of them are volunteers that are either love the idea of Bitcoin or are holding Bitcoin. And the more they improve Bitcoin, the more their net worth goes up. Some of them that are very important and are very good developers, they have joined a company. In some cases, the company is privately funded. In other cases, the company is externally funded. And these people collect a salary to independently work on Bitcoin code to make sure that they're not out there at Goldman Sachs, programming the next financial derivative. Now, as far as some of these companies are privately funded, as in a couple of early Bitcoin adopters want to make sure that Bitcoin remains the latest and greatest in all of crypto technology. So they are more than happy to pay other smart people so that their early Bitcoin adopter status and their early Bitcoins appreciate in value. As far as why on earth would a company like AXA, which is a financial insurance company, one of the biggest in the world, why would they throw $3 or $5 million into Bitcoin core development? Well, because they had like $200 or $300 million, they didn't know what to do with, and they have a division that says, "Hey, invest in new shit." So 3 million of that money or 5 million of that money found its way to being invested in Blockstream. And I even know the people that approached AXA for this investment. And just like idiots invest in Aurora Coin and Paycoin, it's possible that a big institution was convinced to invest in something that's probably not going to give them any returns unless they bought a bunch of Bitcoin. And now the improvement of Bitcoin and Bitcoin being great will make tenfold their investment because they're holding a bunch of Bitcoin. So for whatever reason, what you have to understand is that the investors in these people have absolutely no control of the Bitcoin protocol, no matter how that money goes, because it's an open source protocol that no one has to adopt, even if those changes are made. Again, wrong show. Probably should discuss it on a different show. I don't know if Tyler, you have any other opinions. We're finishing up. Let me just read 2 more questions. We may or may not answer them. I just want to get them out there. We still have over 1,000 viewers. We've had 1,000 viewers for 3 hours straight. We hit 1,500.
Incredible.
All right. Do symmetric triangles more often break to the downside? No. Symmetric triangles are statistically can break to either direction. However, when a symmetric triangle it tends to be a continuation pattern. So if your triangle is being made from a drop in prices, then sure, it has a higher likelihood of breaking down. If your symmetric triangle is made on an upswing, it's more likely to break out. But when it's made, or when a symmetric triangle is a true symmetric triangle, where it captures the high, the all-time high, like what happened in gold, the symmetric triangle in gold in the early 2000, in the late 2010 area was a monster symmetric triangle encompassing like the entire history of gold. And that's the kind of triangle that's 50-50 of where it will break, and it broke to the upside, taking us from 900 to 1900. Did I make a mistake there?
No, I agree. Perfect.
Last one. Is the market cap where Ether, not Ether, God. Is there a market cap where either of you could forecast Bitcoin becoming a more stable asset and less volatile moves? Sure, this is very easy. When the price of one Bitcoin is over $100,000, your coffee purchase with Lightning will be not volatile at all. Your Lambo, however, will still be a little bit volatile. Thoughts, Tyler?
No, that's actually a very interesting question. I took it a little differently from the point of view of I'm complaining that we're down at 38.40, dropped down to 34 at one point, but Bitcoin's somewhere around a third or a little bit more than a third of market cap, where it started out at 100%. And it's become a lot more volatile as it has dropped in terms of its relationship to the total market cap. I think that when Bitcoin gets back above 66%, twice what it is now, up to 70, 75%, we'll see it a lot more stable in terms of volatility. Because, well, that's just the way I feel.
1 second, Tyler. All right. So, yeah. So look, volatility is relative. We are generally less volatile today than we were in 2011. We'll probably be. I mean, it's possible that we're going to go lower than the 2014 bear market. It's possible, and that means Bitcoin is more volatile today than it was in 2014. Is Bitcoin more volatile today than it was in 2014? The answer is maybe. I'm not sure. I think it's a little less volatile, but now that another few months of data is in, who the hell knows, right? So it feels like Bitcoin is almost as volatile as 2014-15. Now, but the idea is the value of Bitcoin goes up so high that the smaller and smaller purchases become less volatile, and you just work your way up from there. Okay, so unfortunately, we have to get back to this idea that Bitcoin will have decentralized competition. As much as I want to bury the question, Ben George is pushing for it, and he deserves a better explanation because of his very generous donations. So he agrees that Zcash and Dash are garbage. So now we're going to bring the discussion back to Bitcoin having competition like Monero and Litecoin. So I'm going to actually expand the question. So let's say it looks like, Ben, you agree that the biggest competition Bitcoin has right now is Monero and Litecoin. I agree with that. I think we're on the same page. So let's eliminate future competition, right? At this point, no one is making decentralized currencies. Everyone is making companies to profit from. Zcash, Dash, ICOs, Ethereum's EOS, and all of its other, copycats. So let's start off with an agreement. I mean, I will also add Doge, add Doge to that list, which everyone knows is not competition at all. We can add Maxcoin to that list, Maxcoin does feel closer to a company, but it's still decentralized, created fairly. And I don't really want to add Digibyte to the list. I haven't looked at all of its history, and I know it's garbage. So, okay. So the only real competition Bitcoin has is Litecoin and Monero. Now, no one else is creating decentralized currencies because there's no profit in it. Now, Monero and Litecoin have somewhat surpassed the test of time. They are still somewhat centralized because Charlie Lee is still considered to be fully responsible. Actually, I'm not even sure why I have screen share on. Charlie Lee is still considered to be fairly responsible for Litecoin, even though he says he quit. And Fluffy Pony, who did not start Monero, seems to be in charge of Monero, even though it is a decentralized project. Okay, so once again, I have to go to Saifedean's book, where he explained why silver became a disastrous currency because nobody needed it, because gold could be subdivided. People don't need choice. Like, I don't know how else to explain it. Anything that Litecoin can do, anything that Monero can do, Bitcoin can do it better. It can do it better by default because Bitcoin will always be a better store of value. Monero hard forks every 6 months. That means that Monero is too centralized. Litecoin, nobody cares about it anymore. Nobody cares. You as a merchant, why do you want to accept a shittier currency? Like, if the currency of your country is shitty, and you don't want it. You only want to accept US dollars at your shop. Like, why do you want to accept your, Venezuelan Bolivar? Like, why? Like, even if you're a Venezuelan merchant and you have a profitable thing going, do you really want to accept the Venezuelan currency? You have to accept the Venezuelan currency, because if you don't, the Venezuelan army can come and arrest you for not accepting the currency of their country. So you're forced to do it. But no one forces you to accept Litecoin. Like, if you can get a sitting president that says you must accept Litecoin at your business along with Bitcoin, then yes, Litecoin will be useful, but not in a decentralized world. People don't want that. Like, I don't want to be paid in Litecoin or Bitcoin. I want to be paid in Bitcoin. The only reason I ever had Litecoin donations, and the only reason I think I had one consulting client that paid me in Litecoin, this was during the spam attacks. And me accepting Bitcoin was actually costing me money. By me accepting like $1 Bitcoin donations during the spam attack days, it put so much data into my wallet that for me to move the money out would cost me more than the small donations. So when Litecoin had a use case, I used it. But now it should not have that use case again, because Bitcoin is going to scale. If Bitcoin can't scale, if Lightning miserably fails, we can then talk about Litecoin or Dogecoin being potential choices for people. Because when you can't make a Bitcoin micropayment, you have to choose. Do I want to use the most convenient, most safe currency, Bitcoin, and pay a $20, $30 fee? Or do I want to use a shittier store of value, a shittier medium of exchange, but it will save me money, right? That's the choice you have to make. Like, for example, I do not have Venmo, but I have PayPal. I can take a PayPal payment and I can make a PayPal payment. They're pretty free because they're person to person, so I don't actually pay PayPal anything. I'm not a business, I'm a person. I only use it for person to person transactions. When a person says, Tone, I want to send you money with Venmo, or Tone, can you send me money with Venmo? I say, I don't want to, because I have a free payment processor called PayPal. And I don't want to take 20 or 30 minutes out of my day to set up Venmo, because it's going to cost me money. Now, I know it sounds weird considering we are going on 3 hours on a YouTube video, and it may feel like I have all the time in the world. But like Tyler and I are doing this 3-hour video, I mean, partially out of the goodness of our hearts, but partially is because we are expecting for this to pay off in the future, whether we become more reputable globally. When Tyler writes his book on, being a money manager, he can sell more copies of that book. He can become more famous. His name will be globally known. And same thing with me, right? I can pick up people coming to my workshops. I can get consulting clients. I can get better speaking gigs, right? So for every minute I take out of my day, it's an opportunity cost. And I have absolutely no reason to ever use Venmo until, or Square or any other payment processor, until I'm forced to do it, where the opportunity cost of me not doing it is greater than me just taking an hour and figuring out how to set up a Venmo account. And this is the same thing with these shittier stores of value. Unless they are actually useful for some specific reason, no one wants to use them. Tyler, thoughts? Oh, no mic, can't hear you. Yep, it should be good. Good.
Nope. Yep.
Yep.
Okay, good. Okay, this has bugged me for a long time, and I'm going to get into a lot of trouble for saying it, but I can't hold it in anymore. one of the biggest problems in the cryptocurrency space are the developers. There are three classes of developers. Let's start with the worst, hackers. All hackers are programmers and developers. Let's take a look at the second group. They are reputable developers who have moved over to unreputable jobs with unreputable ICOs and crypto coins. Then there's a third group that are called the core developers of Bitcoin. All three of them are exactly the same, but they've made choices about their morals, their ethics, their financial situation, and what they want to do. If you round up every one of them in the world and put them all together in a stadium, nobody can tell the difference between any of them on which of the three categories they are in. Now, why is that important to me? Because what Bitcoin maximalists believe, and up till today is true, is that the developers that have stayed with the program and are giving of their time out of the goodness of their hearts and out of their belief and understanding in what they are doing and their faith in the project itself, puts them into a category that's different than the other two categories. But one by one, they leave, they go for the money, and some of them become hackers and hack exchanges and hack wallets and hack a lot of other things. But they all start out with the same principles. Now, your question about choice.
Hey, Tyler, one second. I just want to add that, and someone in the chat pointed it out. Yes, there are white hat hackers, and they're in the first group with the core developers. So yes, there are hackers that are helping, but Tyler is specifically talking about hackers that are doing it for their own personal benefit and stealing money or secrets.
I think I just got knocked out.
No, you're here.
I'm seeing something from Gartner on my screen.
I don't know what that is.
Yeah, I don't either. So that's okay.
Nothing has changed on our end.
Okay, there we go. I'll just move this down. Okay, I accept exactly what you said. Okay, but here's the problem with answering the question about choice in the future. I think Tone answered it great in terms of limiting it down to just Litecoin and Monero. But still, the question is, are all of these core developers working on the Bitcoin project, are they going to succeed in making the changes necessary to have the dream come true? We don't know that. And one reason we're having this bear market is because things have taken so long, and as Tone explained, as they are developed, new things come along. And therefore, nothing seems complete. And we're not sure about scaling, and we're not sure about cost, and we're not sure about hash rates, and we're not sure about all that stuff. So let's do a thought experiment just for a second to answer Ben's question. Let's say that at some point in the future, half of all the great developers that have been working, the 100 or the 200 or the 300, I hear all kinds of different numbers, working on the core project and working on Bitcoin and the blockchain, half of them go and join Monero or Litecoin. And now you've got an equal balance of talent. What we've been arguing, and almost everybody argues constantly, is all of the talent has stayed with Bitcoin. But let's assume that's not true. people get tired of how long it's taking to get to where they want to go. They're not making a whole lot of money doing it. They're spending their whole time, so they move over. Now what happens? In my opinion, now you have a choice. To me, it is not a choice based simply on decentralization. It's also on the talent that is attempting to keep the original idea true and to have it develop so it's actually a useful product. And up till today, that has not been accomplished. So that's my long answer.
All right, I think on this note, I think it's time to close it out. We got another little tip thanking us for everything we do for the space with these videos. And no, thank you guys for watching. I mean, we did have 1,100 viewers. I'm gonna go back to screen share for one last minute. I don't think anything has really changed with the price. Oh, it went up a little bit. We're back to 64.28. We were down to like 63.28 earlier, so we actually did go up $100 while we were on the air. This looks good for a potential move to 7,000. We're back. Look at the hourly chart. We're about to we just started a candle that if this candle closes, we got a new swing high. I can certainly see us going up to 7,000, but the bear market is not over. And whatever caused the jump in price yesterday is probably the result of one trader or one institution or like one entity. And one entity does not change anything in a trend of any asset. So if this one entity or person continues to defend a certain area of price, he will eventually run out of money unless he's doing it strategically and he's profiting on the pump and then on the dump. So he's defending the area, but then he's also responsible for bringing it back to that area, in which case he can continue to make more and more money and therefore continue to mess with the price of Bitcoin. Is that manipulation? I say no. Tyler will say maybe. Right?
Yeah, closer to a no, but possibly a maybe.
Right. And that's certainly debatable. Okay, so guys, if you liked this video and our other videos, you can support by just using the affiliate codes. I don't force anyone to donate anything. I don't even mention it, but thank you for your Google live chat donations to get your questions in. And but if you're going to use any of these products or services or companies, please feel free to use these links. They will only save you money in some or most cases. And check out my homepage. I'm going to, add some more stuff. The Atlanta workshop is almost sold out. I believe I have a venue now. I will be letting people know that are coming. I mean, if you're not signed up, you don't need to know where I'm going to be. And Boston is coming up. Las Vegas should go on for sale any day now, and so will Chicago. So keep an eye on that. And if you are interested in this crazy numerical system on top of these candles, please check out the indicator page on tonebase.com. Tyler, final thoughts, final words?
No, thank you very much. Thank everybody for listening for this long. And Tone, it's been very interesting. Thanks.
Oh, yeah. I started this podcast because I was rendering a video for Crypto Scam Ethereum. And I had like an hour of free time because I wasn't going to leave until that's done. And I'm pretty sure that's over. It's been 3 hours. And that's what happens. You start answering some questions and time gets away from you. Australia, yes, in November. I will be talking about that coming up. All right, guys. Thank you so much for sticking around with us. Oh, man. I don't know if I'm going to do a live show tomorrow. I really need to look at traditional markets some more. Somebody asked me about the wheat market. I need to look at that. I haven't looked at wheat in a long time. And I forgot to do it today, but it wouldn't have made sense. So maybe next time I got to remember and I'll cover wheat. All right, guys. Thank you so much for staying with us and see you all on the next one.